a technical advisor, and they'll get all of your questions answered. If you've got those questions for us, you can send them to us on that number that you see at the bottom of your screen, or in fact on any one of our social media platforms. Let's get you a check of where the markets are right now and what they're doing. Let's talk about the benchmark, because what a show. After the crack that you saw yesterday, you're seeing buying come in once again, and you are at the high point of the day in trade today, above the 22,400 mark comfortably as we speak, with gains of about 2.4%. And let's also look at the broader markets to see what's happening there. And similar gains in both the mid-cap as well as the small-cap index. The mid-cap index up about 2.8% or thereabouts. The small-cap index up about 2.4%. So buying interest evident. Incidentally, I want to point out, and we'll get you those voices a little later in the show, but I was speaking to representatives of two mutual fund houses, and they both told me that they saw inflows yesterday, which is not surprising if you think about it, because the Indian mutual fund investor and the investor in general has changed the way that they approach investing in the Indian equity markets. Let's talk about a few stocks in particular then. In fact, let's focus on the gainers on the benchmark Nifty 50 and say which of these stocks are contributing to the biggest gains. HDFC Bank, which was down in the dumps yesterday and among a sea of red, is now gaining ground. It is the top contributor, but the top gainers on the Nifty 50 include Hero MotoCorp, which is up as much as 8% in trade. HUL continues to gather momentum and ground. It's up as much as 7.7%. Mahindra & Mahindra, possibly on the back of a rural theme that will play out, is also gaining about 6% or thereabouts. Nestle continues to gain ground. ITC, only about 5 losers on the benchmark Nifty 50. The likes of Larsen & Toubro, BPCL, Grasim and Power Grid losing ground in trade today. SBI more or less flat after the kind of crack that it saw yesterday. I'm joined by Vaishali Parekh as well as Ashish Kapoor today, and they're going to answer all of your questions. And I do want to start with you, Vaishali. Heartening signs to say the least, and you're seeing quite a good bounce from the low point yesterday.
Very good morning to all of you. Yes, yesterday's move was very drastic. And purely on technical terms, we believed that 21,250, which was nearly the low made yesterday, that should hold on. And we were expecting a bounce. And today also we are sustaining well about 22,350. So if this momentum continues, I think this bounce back is further to go on till 22,600. I wouldn't say it's a conclusive bottom made, but I would say good levels to start accumulating, because market would continue to be choppy till we see the final outcome on the 9th. And I think 20,600 should act as a main support.
Okay, and so therefore the range is quite wide, understandably so. Ashish, I'll come to you in just a moment, because I want my colleague to take us through the major development on Hindalco, which is not doing too much in trade, but the development is quite significant. Novelis has shelved its IPO plans. The implications for Hindalco is what we need to discuss. Kanika is joining in to tell you more. Kanika, what are you picking up?
Now, in what could have been one of the largest listing this year by an Indian-owned company, Novelis has announced postponement of its IPO due to market conditions. Now, the company has mentioned that market conditions did not support achieving their expected premium outcome, and Novelis will continue to evaluate the timing of their offering in the future. Now, Hindalco had planned to sell almost 7.5% stake in the company with an IPO price band ranging between $18 to $21 per share. Now, including a green shoe option, the total proceeds could have gone up to $1.09 billion. But and on the capex front, Hindalco had planned to spend rupees 6,000 crore in this financial year. But without the IPO proceeds, Hindalco might need to explore alternate funding sources, or will need to reconsider the scale and timing of its capex projects. Coming to valuation, the IPO was targeting a valuation of almost $12.6 billion, attributing 2/3 of Hindalco's market cap to Novelis. But because of the IPO coming in, the SOTP value ascribed by brokerages, which was almost 790 to 850 rupees per share by Motilal Oswal and Anand Rathi respectively. Now, per share value of investments given by them was rupees 49 and rupees 37 respectively, which includes the share of Novelis. Now, and at the upper end of the IPO band, there was a valuation premium. That premium has escaped even though Novelis stays in the business now. Now, the particulars of all of this is a big question mark.
That's a well-put statement. It's a question mark. Let me take that question to Ashish then. And the largest implication, of course, is for Hindalco. Ashish, and good morning to you. What would you do with Hindalco at this juncture?
Hi, good morning. I think, see, it has just got postponed, and my best understanding would be that it's a matter of time before the IPO comes. So I wouldn't worry too much about it. And I think if I'm holding Hindalco, I'll continue to do so because generally the metals are doing well and likely to continue doing well. And Hindalco is one of the very well established players in the metal space. So I don't see any difference happening. I think continue to hold on to it.
Fair point. That's a view on Hindalco. It's time to jump straight into the questions, and quite a few of you have already written in. Just a quick reminder, if you're just tuning in, you can send your questions to us on that WhatsApp number on your screen. The first question I will take is, okay, we have an update. In fact, at the bottom of your screen, what you see is breaking news. Mr. Chandrababu Naidu may demand or make certain demands. He may demand one ministerial berth per 3 members of Parliament is the latest development that we're seeing. He may demand as many as 5 ministerial berths in total. Remember, not too long back, you had Mr. Chandrababu Naidu address a press conference to talk about the assembly elections, where he has said that he will, in fact, take the role of Chief Minister. And this is, of course, the latest development. We'll bring you more updates as we get them over the course of the day. For now, let's jump to the first question. As I pointed out, Deepal Thakkar has got the first question. He's asking about Jain Irrigation. He's looking at a technical view. He's bought at levels of 71 in November of last year. The stock is currently trading at 60, though it's up about 10% in trade today. He's asking, should he book losses or hold on? Vaishali, what's the view on the charts?
In a hurry, let's wait and watch because it's really not damaged to that extent. If it breaks yesterday's low, then yes, of course, one should exit because today's move, I think it is showing a bit of strength. And once the stock moves above 64, 65, he will regain the momentum and he will get his levels of 70 to start with. And above that, I'm looking at higher targets too. So I would say it's better to average out these stocks.
All right. The next counter we're talking about is ABB, and it's a question from Prakash. He's bought at levels of 3,400, and this is a stock that has, by and large, outperformed over the course of several months. It's currently trading at 7,719, so well above the buy price. In fact, it's a doubler for Prakash. The question is, Ashish, should he hold on? What's the view on ABB?
Well, I think certainly hold on. I think capital goods segment is doing very well, and this company has got its growth momentum back. Doing very well. The returns have been very fantastic. Quarterly results, quarter to quarter, they are doing pretty well. So I think even both the industry and the stock is doing very well. Again, very well established MNC. So I don't see any reason why you should sell or. In fact, you could look at buying opportunities on any decline.
The next counter we will talk about is HAL, and it's another counter that got battered just a tad bit. It's not just a tad bit. In fact, it got quite badly battered in trade yesterday. It's down about 1.5% in trade today. The question is coming in for... Oh, sorry, apologies. I've been asked to hold HAL for another day and talk about Infosys. So this is a question coming in from Aman Kukreja, and he's bought Infosys at levels of 1797. Should he average at the current juncture? Vaishali, what's the view on this?
I would definitely agree so, because right now we are seeing that IT index has really not performed and participated. And right now it's showing momentum, but I would say even for a long-term perspective, it makes a lot of sense to start accumulating good IT stocks. So of course, Infosys is the top of the line, one should accumulate from here on.
Okay. All right. One more question we will take, and then we have to address the political developments that you're seeing on the screen. Entero Healthcare is the name of the counter, Vaishali, and this question is coming in from Satya, asking for a 1 to 2 year time horizon. Would you buy at this juncture?
Let me have a look because I'm really not tracking the stock. So let me see. Entero, the one which is 1,000 up. So I would say, there is really nothing much happening. All I can say is that there is a good consolidation going on at 1,000 levels. Unless and until the stock moves above 1,100, 1,150, I would say it's a range-bound stock. The clarity comes only above 1,150. So fundamental input is required right now if the stock has got any meaning, because technically I would say hold, wait for a breakout to 1150.
Okay. I did promise that we will speak about this latest development, but we're just going to hold on just a tad bit before we do. Sushila from Bellary is asking about SJVN, bought at levels of 101, 502 shares. Should you hold or exit is the view. Quick view, Ashish?
Well, I think should hold on. I think the company will do well in the coming time. I think should hold on.
Quick view on the charts, Vaishali. Do you have that, SJVN?
So yes, I do have it, and I would say exit if 120 levels break, because that could call for a further corrective move going towards 100. So right now it's in a safe zone, but below 120 it would call for that.
Okay. Several stocks on this list, the likes of Bharat Electronics as well as Tata Elxsi, Data Patterns, NHPC. Which would you buy at this point, Ashish?
BEL for sure, Tata Elxsi also. I didn't get the other two.
So BEL, a Data Pattern as well as NHPC.
Okay, if I have to choose, then it will be BEL and Tata Elxsi. If I have to choose two or more before.
Okay, fair point. It is now time to talk about the latest political development. Of course, there's a lot that is shifting, that is moving, and we've got Tamanna to break down this latest development for us. Chandrababu Naidu addressing a press conference earlier today. What is the latest development about?
So many things happening in the last half an hour or so, Alex, as is expected in this time, action moving thick and fast. So Chandrababu Naidu's press conference, definitely a balm to the markets. You're seeing that kind of recovery coming in. And essentially because he made it very clear he's with the NDA, he's going down to Delhi, and there is really no doubt that he will be part of the NDA. But we've been speaking since this morning about what's the quote-unquote pound of flesh, and more details coming in right now on that. In fact, this is a story by Vikas Bhaduria of the NDTV network, and his sources telling him, and we'll get him on the phone in just a second, his sources telling him that the TDP is demanding the post of Speaker and one ministerial berth for every 3 MPs. So if you see, out of the 16 seats that they've got, even if I do a conservative sort of calculation, that's 5 ministers. Now, this is a negotiation. Right, this is the first leg of the negotiation. Now, the pictures you're also seeing on your screen is of Mr. Nitish Kumar taking that flight from Patna to Delhi. There's an NDA meet later this evening, so crucial for Nitish Kumar to be there. Right behind him is Tejasvi Yadav of the JDU, who's part of the India Alliance. So that's an irony and an interesting set of pictures there. Now, if this is indeed the set of conditions put forward by the TDP, then as being the other important alliance partner, and almost equally important, because 14-16 is the split between the TDP and the JDU. We should get those numbers on the screen of how many seats each of those alliance partners have got. If there is in fact a 1:3 formula, then that is something that Nitish Kumar is very likely to also demand. So we don't know how it will go, but that's going to be interesting. I don't know if we have that soundbite of Chandrababu Naidu that we had clipped from the conversation earlier, but it would be very key to note what he was saying. And he had this huge victory speech this afternoon, talking about how this was a new beginning, etc. But he also reaffirmed his presence in the NDA. Listen in.
We are in NDA. I am going for NDA meeting. In course of time, anything, we'll report to you. Thank you.
All right, so we just clipped out the little bit of English, speech that he gave. Of course, the bulk of the conversation was in Telugu. So 2 or 3 things that have happened,
Yes.
Alex, if I have to put it succinctly. One, that it's very clear that Chandrababu Naidu wants to be with the NDA. He's part of NDA. He was part of NDA before the election results came in, and he doesn't seem to be moving from there. Nitish Kumar, we haven't heard from him yet. There has been no speech yet, but there are no signs of concern. So the question about whether the allies will come on board, yes, they do seem to be coming on board. Now the rest is about at what cost and what do they
I was just
demand.
going to ask, you know, when I read it on the screen, Tamanna, I must admit that it didn't sink in till you explained what that meant. 5 ministerial posts is nothing to sneeze at.
Yeah, no, and I mean, that also then comes into what the size of the government is, how many ministries you have, because if you have to accommodate, now this is what coalition politics looks like, Alex. A lot of people have forgotten because you haven't seen that in the last 10 years. But, you know, and you've seen stages in the last 2 terms of the NDA where you have one minister with multiple ministries handling more than one thing. Here you have to accommodate everyone. And now you're going to have negotiations to the extent of MOS, independent charge, which of the big ones where there are actually big policy decisions to make, all of that comes into play.
So my question is then, is the concern that some people have raised warranted? Where, and I remember UPA 2 and UPA 1, which were coalitions obviously, or UPA 2 was certainly a much weaker coalition than UPA 1, where you saw allies getting quite marquee portfolios, and they were focused on their own constituency. So is there a dilution of the overarching theme that the BJP might have?
No, but when you're comparing it to UPA 1 and 2, look at the proportion of the BJP seats.
Yeah.
BJP has 80% of the seats in the NDA. And the fact is that technically you had a coalition government right from 2014. It was NDA 1, NDA 2, and now is NDA 3. Led by the BJP, yes.
As majority.
As majority, but they are still with the lion's share. Do I have, yeah. So I have Vikas Singh Bhaduria on with me. Vikas, ये बताएं कि आपके सूत्र क्या बता रहे हैं आपको कि टीडीपी की क्या डिमांड्स हैं?
ये देखिए, हमारे सूत्रों ने ये जानकारी दी है कि टीडीपी जो है वो इस गठबंधन में, एनडीए में बीजेपी के बाद सबसे बड़ा दल है। ऐसी सूरत में वो बार्गेन ज्यादा करेगी और टीडीपी की तरफ से जो मांग स्पष्ट रूप से सामने उभर कर आ रही है वो ये है कि 1 लोकसभा अध्यक्ष और हर 3 सांसदों पर 1 मंत्री पद। ये टीडीपी अपनी डिमांड रखने वाली है एनडीए की बैठक से पहले, जब इंडिविजुअली वो पार्टी अध्यक्ष जेपी नड्डा और गृहमंत्री अमित शाह से मिलेंगे, टीडीपी प्रमुख चंद्रबाबू नायडू, और उसके बाद एनडीए की बैठक में भी इस बात को रखेंगे। टीडीपी को पता है कि उसकी ताकत इस समय ज्यादा है और वो बार्गेनिंग करने की स्थिति में, इसलिए ज्यादा से ज्यादा गेन करने के लिए वो अपनी बातें यहाँ पर रखेंगे। इससे पहले आपको पता है कि 1999 में जब टीडीपी वाजपेयी सरकार का हिस्सा बनी थी, तब भी जीएमसी बालयोगी को उसने लोकसभा अध्यक्ष बनवाया था और तब भी टीडीपी उस अलायंस में दूसरा सबसे बड़ा दल थी। और आज फिर से 2024 में वो स्थिति है कि टीडीपी सबसे बड़ा दल है बीजेपी के बाद, और ऐसी सूरत में टीडीपी की तरफ से ये मांग रखी जाएगी। लेकिन देखना होगा कि बीजेपी लीडरशिप उनको किस तरह से कन्विंस करके कम से कम पर राजी कर लेती है। लेकिन फिलहाल की जो सबसे बड़ी खबर है वो ये है कि 1 लोकसभा अध्यक्ष और 3 सांसदों पे 1 मंत्री पद, तो इस तरह से 5 मंत्री पद और 1 लोकसभा अध्यक्ष टीडीपी अपने हिस्से में चाहती है।
तो विकास जी, फिर नेक्स्ट जो लॉजिकल सवाल है कि अगर टीडीपी ये मांग कर रही है तो फिर जेडीयू ज्यादा पीछे नहीं रहेगी? कम से कम इसी तरह की मांग होगी। तो अगर इनके 16 एमपी और उनके 14 गिने, यानी 9 से 10 मंत्री पद दोनों अलायंस पार्टनर मिलकर मांग सकते हैं, क्या ये कहना ठीक होगा?
जी हाँ, बिल्कुल। देखिए, अगर टीडीपी के साथ इस फॉर्मूले पर बीजेपी सहमत होती है तो निश्चित रूप से बाकी अलायंस पार्टनर के साथ भी उसको इसी फॉर्मूले पर सहमत होना होगा। 2014 और 2019 में हमने देखा है कि बीजेपी ने 5 सांसदों पर 1 मंत्री पद दिया था, और लेकिन अब 2024 में ये जो बार्गेन पावर है निश्चित रूप से बाकी दलों की बढ़ गई है। तो जो फॉर्मूला तय हो जाएगा एनडीए की बैठक में 3 सांसदों पे या 5 सांसदों पे 1 मंत्री पद, उस फॉर्मूले के तहत न केवल टीडीपी को बल्कि जेडीयू को भी ऑफर करना पड़ेगा। और निश्चित रूप से यहाँ पर जो भी फॉर्मूला बनेगा वो सभी दलों पे लागू होगा, न केवल एनडीए के जेडीयू और टीडीपी, बल्कि और भी जो छोटे छोटे दल हैं उन सब पर इसी फॉर्मूले के तहत बार्गेनिंग होगी।
ये बात भी सही है। जो शिवसेना दल हैं उनके भी 5 या 6 सांसद हैं, तो सबको वो देना पड़ेगा। विकास जी, बस एक बात समझना चाहूंगी। एक तो हुई मंत्री पद की बात, और फिर कौन सा मंत्रालय, इंडिपेंडेंट जज, एमओएस एक्सेट्रा, वो सब आ जाता है। दूसरी बात है स्पीकर की डिमांड। क्या ये सबसे एक मुश्किल चीज होगी किसी भी एलाई पार्टनर को मांगने के लिए, क्योंकि ये बीजेपी छोड़ना नहीं चाहेगी?
जी हाँ, बिल्कुल। देखिए, जब अलायंस की सरकारें होती हैं तो हर दल ये चाहता है कि उसका लोकसभा अध्यक्ष रहे, ताकि जो संसद में बदलते हुए गणित हो, समीकरण हो, उस पर उसका कंट्रोल रहे, क्योंकि लोकसभा अध्यक्ष बहुत ज्यादा इंपॉर्टेंट हो जाता है गठबंधन की सरकारों में, और तब जब स्पष्ट बहुमत की सरकार ना हो। तो ऐसी सूरत में बीजेपी की कोशिश होगी कि लोकसभा अध्यक्ष उसी का रहे, लेकिन चूंकि एक बार टीडीपी के हाथ लोकसभा अध्यक्ष लग चुका है, ऐसी सूरत में वो फिर से कोशिश करेगी कि लोकसभा अध्यक्ष उसी का रहे और कंट्रोल एक तरह से उसके हाथ में रहे। हालांकि बीजेपी के पास बहुत बड़ा स्पष्ट बहुमत तो नहीं है, लेकिन फिर भी संसद में एक सबसे बड़े दल होने के नाते उसके पास एक, कहते हैं, मनोवैज्ञानिक बढ़त है। तो ऐसी सूरत में देखना होगा कि बीजेपी इस मांग को किस तरह से लेती है। और सबसे बड़ी बात है, लोकसभा अध्यक्ष हमेशा उस दल को दिया जाता है जिसके साथ दो दलों के बीच में सबसे ज्यादा भरोसा हो। बीच में खटास आ गई थी टीडीपी के साथ बीजेपी के रिश्तों की, दोनों दल अलग अलग चुनाव भी लड़े पिछला, लेकिन इस बार 2024 में फिर से एक साथ आए हैं। अब देखना होगा कि ये भरोसा कितना दोनों नेताओं के बीच या दोनों दलों के बीच मजबूत होता है, और ये इससे स्पष्ट हो जाएगा कि लोकसभा अध्यक्ष टीडीपी को मिलता है कि नहीं मिलता है।
तो अगर दोनों दलों की तुलना करें, दोनों अलायंस पार्टनर्स की तुलना करें, तो विकास, आपके मुताबिक भरोसा कौन से दल पर ज्यादा है? कहां पर समीकरण ज्यादा बेहतर बन रहे हैं, चंद्रबाबू नायडू की तरफ या नीतीश कुमार की तरफ?
ये देखिए, मुझे लगता है कि इससे पहले बीजेपी भी बार्गेनिंग करेगी कि वो इस स्टेज पे पहुंचे कि हमें किस पर ज्यादा भरोसा करना है। वो बीजेपी की कोशिश बार्गेनिंग में ये होगी कि लोकसभा अध्यक्ष उसके पास ही रहे, ताकि कंट्रोल बीजेपी के पास रहे, और निश्चित रूप से संसद के सबसे बड़े दल के रूप में उसका पास ये अधिकार होगा भी, और वो इस अधिकार को सुरक्षित रखना भी चाहेगी। लेकिन अगर ऐसी सूरत में स्थितियां बनती हैं कि लोकसभा अध्यक्ष उसका नहीं रह पा रहा है, तो फिर टीडीपी को ही लोकसभा अध्यक्ष देना, मुझे लगता है कि इससे पहले की जो सरकारें नहीं उसमें दिया है, तो टीडीपी का दावा ज्यादा मजबूत बनता है, उसको दिया भी जा सकता है। लेकिन ये बार्गेन की टेबल पर ही तय होगा। जब समझौते का टेबल होगी उसी पे तय हो पाएगा कि आखिर इस पर क्या सौदा हो पा रहा है।
नहीं, ये बात तो सही है कि अब इस समय तो हम बात करें कि क्या मांगे रखी जा रही हैं, उसके बाद क्या दिया जाएगा वो दूसरा स्टेप है। लेकिन इस बीच जब मंत्रालयों की बात हो रही है, और ये एक बड़ा सवाल है कि किस तरह के मंत्रालय अलायंस पार्टनर्स के पास जा सकते हैं, इस पर कोई कुछ रोशनी डाल सकते हैं आप?
ये देखिए, अभी तो एकदम स्पष्टता नहीं है, क्योंकि किसी भी दल ने अपनी तरफ से पत्ते नहीं खोले हैं। अभी फिलहाल कोशिश ये है कि पहले फॉर्मूला तय हो जाए कितने सांसदों पे कितने मंत्री पद, और उसके बाद फिर सेकंड स्टेप होती है किसी राजनीतिक दल की या राजनेता की, कि फिर वो बार्गेन करे कि ठीक है, आप मुझे 5 सांसद 5 मंत्री पद दे रहे हैं, तो अब मुझे ये मंत्रालय चाहिए, और फिर उस पर बार्गेन होता है। तो मुझे लगता है कि शपथ ग्रहण इस बार थोड़ा सा लंबा खिंचेगा, और बार्गेनिंग जब तक पूरी नहीं हो जाएगी तब तक शपथ ग्रहण नहीं होगा, क्योंकि शपथ ग्रहण होने के बाद अगर मंत्रालय के बंटवारे में देरी होती है तो फिर इसका जो मैसेज होता है वो बहुत ज्यादा खराब जाता है। सरकार के नेतृत्व के ऊपर सवाल उठता है, लीडरशिप के ऊपर सवाल उठता है, और ये खराब मैसेजिंग हमें नहीं लगता है कि बीजेपी या प्रधानमंत्री मोदी जाने देंगे। वो सरकार का शपथ ग्रहण समारोह जब तक चीजें तय नहीं हो जाएंगी तब तक करना पसंद नहीं करेंगे। लेकिन ये बात तय है कि तमाम जो दल हैं वो ऐसे मंत्रालयों की मांग ज्यादा करेंगे जो उनके राज्य की अपेक्षाओं को पूरा कर पाए, और ऐसी सूरत में अर्बन डेवलपमेंट मिनिस्ट्री से लेकर ग्रामीण विकास मंत्रालय और कृषि मंत्रालय तक पर नजर है। रेल मंत्रालय पे खास तौर पर जेडीयू की नजर रहती है, क्योंकि रेल मंत्री खुद नीतीश कुमार रह चुके हैं। ग्रामीण विकास मंत्रालय पर नजर रहती है, क्योंकि बिहार में जो ग्रामीण का इलाका है वहां पर काफी जिसको कहते हैं कि विकास की संभावनाएं हैं, और ये जो मंत्रालय ऐसे हैं जहां पर बड़े लाभार्थी वर्ग भी खड़े हो सकते हैं इन मंत्रालयों के जरिए। तो दोनों मंत्रालय, अर्बन डेवलपमेंट मिनिस्ट्री, ग्रामीण विकास मंत्रालय, उपभोक्ता मंत्रालय, ये ऐसे मंत्रालय हैं जिन पर रेल मिनिस्ट्री, फाइनेंस मिनिस्ट्री, जिन पर सभी दलों की नजर होती है। तो देखना होगा कि अब ये एक बार फॉर्मूला तय हो जाए तो किस तरह से मांगों पर आगे बढ़ते हैं ये तमाम राजनीतिक दल।
बहुत बहुत शुक्रिया विकास, ये सारी बातें समझाने के लिए। विकास सिंह भदौरिया there of NDTV network with that massive story. This one's huge, Alex.
It is fascinating, and it goes back to what we were discussing just before he joined in. Some of those very juicy ministerial positions.
That's an interesting word. Yeah.
That look very attractive to the allies because they know that they're far more important than they have been in the last 2 terms.
Right. And railways, I think, is the big one because look at the plans which have been put forward. The rail budgets have been huger and huger every time. So there is a lot to do. And I think also the important part that Vikas said, because these are both very strong regional leaders, they have to think about their states as well.
Constituencies,
so,
absolutely.
So ministries which help them further what they have promised to the people of Andhra Pradesh and the people of Bihar.
So it's going to be a balancing act for sure. It's going to be very interesting to watch at the very least.
Yeah.
Tamanna, thanks so much for putting all of that into context. And of course, we will be talking about this through the day and in the coming days as well. So please do stay tuned and watch NDTV Profit for all of the news and analysis in the political theatre as it develops. We're completely out of time, unfortunately, on this particular edition of Ask Profit. I'd like to thank both of our experts, Vaishali as well as Ashish, for joining in and answering all the questions that they did answer. Unfortunately, we had to curtail this program. Thank you so much for understanding. Viewers, we'll be back in just a few minutes to take you through what's happening with the markets. Do stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome, this is Hot Money. I'm Agam Vakil, and we're taking stock of all the advances that are coming through as far as the markets are concerned. In fact, the Nifty at the moment is advancing by quite a bit. We're looking at a gain of around 1.8%. A lot of recovery coming in for the Bank Nifty as well. And the Bank Nifty will be in focus on account of the weekly options expiry today, but can't rule out any choppiness. But, as far as the constituents of the Nifty go, once again, we do have some amount of strength returning to some of your key benchmarks. Of course, in terms of contribution, we have something like an HDFC Bank, something like, an M&M, an Infosys, an HUL. All of them are looking at contribution towards the upside. Don't have too much in terms of stocks which are in fact coming off. That said, even in terms of your broader markets, we've seen some amount of recovery there. If you consider just the key mid-cap and the small-cap indices, the mid-cap index up around 2.4%, the small-cap index is also up around 2.2%. There's been just a little bit of an underperformance in the small-cap index with respect to the other relatively larger indices. That's something to keep in mind as well, not just today, but yesterday as well. And again, we continue to give you an update on the markets. For now, markets are looking steady. It does seem like we're getting a breather at the moment after the sharp fall and the increase in volatility that we've seen. But we shift focus to the bond markets, and we have Suyash Chaudhary. He's the head of fixed income at Bandhan AMC, who's joining us on the show. Suyash, good afternoon. Thanks so much for joining in. Suyash, we were just going through one of your latest notes on the current state of the economy, in which you actually talk about three factors, three pillars. That's the current account, the fiscal deficit, and inflation, where all these three factors are coming together, and we can expect a continuity, a little bit of consolidation. Can you give us your wrap and your analysis here?
Sure. Thank you for having me. Our fundamental premise is that India fixed income is probably at the start of a structural market, and a lot of factors have aligned for this to happen for India. So you referred to, the three macroeconomic variables that constitute macroeconomic stability, which is current account, fiscal, and inflation. And all three have been consolidating at a reasonably rapid pace. And importantly, a lot of this is policy driven and not just a happy accident. So on current account, our services trade surplus run rate has improved by roughly $5 billion per month over the last 3 years, which has cut our current account deficit by in excess of 1% of GDP at headline level. RBI is an institutionalized inflation targeter, and government has been complementing with supply side management. And fiscal consolidation for India is there for all to see. So not only was the post-pandemic response well organized, but there has been speedy consolidation, including a favorable mix in spending. Second, this amount of consolidation now is happening at a country size, which is very difficult for large institutional global investors to ignore. So India is already a top 5 economy. In the next foreseeable future, we become a top 3. So we are not, any sort of a side story where even though there is good macro, large global fixed income investors can ignore. That's not the case anymore. So we think, they will have to enter India. And the third, which is the index inclusion, is a great facilitator for them to start to pick up more India exposure. And we think it's a multi-year trend and not just restricted to $20-25 billion. And fourth, if you see the way US macroeconomic policy is progressing, it is basically characterized by fiscal dominance. And this is now a multi-year problem where probably over the next 9-10 years also, US fiscal deficits refuse to consolidate. This is also backed by high current account deficit. And if you put the geopolitical and boundaries that are being created and the de-dollarization that is happening in select parts of the world, probably barring cyclical interruptions, the dollar is on a secular downtrend over the next few years. And that would greatly benefit well-run emerging market macro stories like India. So if you put these 4 factors together, we think India is pretty much in a structural market. And, the bar for that to turn is fairly high. And, some minor change in political structure is not going to change it, is basically our view.
Suyash, good afternoon, Neeraj here. I mean, yesterday the moves, sentimental as they would have been in large part notwithstanding, One of the feelings is that what if, and it's a presumption of course in some parts, what if the nature of the spends changes? The government, the new NDA or the NDA may not really tweak the fiscal glide path too much, but what if the nature of the spends changes wherein it goes towards some populist measures or some welfare schemes as opposed to what inherently the purse would have been largely used, which is capex infrastructure? Does that alter the way the longer term trajectory of how fixed income investors, albeit even global equity investors and thereby flows, or look at India and impact on flows thereof?
So that's a great question, Neeraj. Let's look at the size of the potential risk that you are flagging. And first of all, it's important to figure out what all constitutes macroeconomic stability. So I spoke about inflation, current account, and fiscal dynamics. Now, we don't think RBI changes colors at all. The inflation targeting is pretty much institutionalized in India, so that risk you can basically eliminate. As far as current account is concerned, this rise of global capability centers and so forth, which is leading to a change in our services trade surplus dynamic, which in turn has led to current account compression at a headline level, probably is also a very great theme and does not turn because of some minor tweaks in government policy. The biggest risk is what you pointed out, which is fiscal risk, but there also, one has to look at the size of the issue. See, a 10, 20, 30 basis point change in either expenditure mix or expansion in deficit will not change the India structural bond story. And we don't think, there is any need to speculate that the basic characteristic of the mindset of the government and the way they have approached macroeconomic policy is going to turn. So at best, or at worst rather, the risk on the table from a market standpoint you're looking at is a slightly slower pace of consolidation on fiscal deficit from here on, and probably a bit of a skew change in favor of revenue spending. Bear in mind that the government is on path to consolidate deficit by almost 500 basis points by next year from the peak that we had achieved at the peak of the COVID crisis. Now, that scale of fiscal consolidation is truly noteworthy and has to be rewarded by global investors. So, like I said, the bar for India macro story and the structural bond market story to turn is much higher than a 20-30 basis point shift as a percentage of GDP in either expenditure mix or fiscal deficit trajectory.
So yes, the other aspect therefore is what happens to the two key variables, which is yields as well as INR, because a lot of it has also got to do with global factors, particularly of course with the Fed rate trajectory as it shapes up in the second half of the calendar, if there is some movement there, but also the belief that maybe near term, because of the event that's happened yesterday, if we see some outflows, and we saw some outflows yesterday, but if we continue to see outflows in the near term, does it have a material impact? What's your sense about the near term and the medium term trajectory of both the bond markets as well as the currency markets?
So first of all, one has to realize, as we have been speaking, India is a great macroeconomic story. And second, bonds are cheap here. So whether it be versus forecasted inflation, and even assume some 20-30 basis point volatility on inflation, or versus the repo rate, bonds are cheap, right? So there is a whole lot of valuation cushion as well when we speak about bonds. Now, to your point, let's look at the near set of factors. Obviously, the greatest clarity market will get with respect to the stance of the government is going to be in the budget, the union budget. And, we are just looking forward to confirmation of what we are already thinking, that there are only going to be minor tweaks. However, while we wait for the budget to happen, there are quite a few positives that are stacking up for the India fixed income market. One is a cut in bond supply for first half of this financial year. Second is the impending JP Morgan index inclusion, which will attract some additional passive flows probably. And third is, if you see over the last 2 to 3 weeks, there are now distinct signs that the US economy is beginning to weaken. Albeit we have seen US data being volatile, but for whatever it's worth, what we are seeing over the last 2 to 3 weeks is distinct signs that the labor market is weakening, consumer spending is weakening on the margin, and wage trends are pretty much stable, and which is reflected in bond yields coming off as well. So as far as we are concerned, the final test is going to be the union budget. We don't expect anything, much dramatic to happen there that will change our view on India bonds. However, for more skeptical investors who want to wait out, there is still reasonable short-term positives on the table, which should probably keep bond volatility at bay as far as India fixed income is concerned.
So Yash, you also briefly alluded to the de-dollarization. You also spoken about de-premiumization of certain US assets. And in your note, you also mentioned US moving towards fiscal exceptionalism. Can you explain this and as to how this can in fact work when it comes to the US markets?
So actually, that's a very important point, and which is also in some sense getting manifested in global portfolio flows as we speak. So you'll recall that in 2 years post-pandemic, US ran a fiscal deficit of roughly between 12 to 13% of GDP. Especially with the benefit of hindsight, you may argue that part of it was probably too much, and much more than just shoring up weaker personal and corporate balance sheets in the country would have dictated. However, moving on, even the pace of consolidation in US fiscal deficit has been quite slow. So it's a bit of a head scratcher that today there is a central government or federal government level deficit which is around 6% of GDP, even when economic growth there is slightly above trend. Meanwhile, interest costs are creeping up. And, so for example, if you look at the Congress Budget Office, which is a bipartisan entity's forecast over the next 7-8 years, it's unlikely that there is any meaningful consolidation in US fiscal deficit. Now, current account to some extent mirrors expansion in fiscal deficit, because if you assume that households and corporates are constant, any expansion in government saving should reflect in higher current account deficit. And that's precisely what the US is now seeing. Current account deficit levels of almost 3% of GDP, even though they have achieved oil autonomy. Now, if you put this together with geopolitical evolution, basically you can argue that there is, like we say, a depremiumization of US dollar, which is already underway, which means that you still recognize dollar is the reserve currency of the world, but the premium you want to give to hold US dollar assets is shrinking. One way to us this is showing is narrowing yield differentials between US bonds and bonds of other well-run macroeconomic stories like India. But there are many others around the world as well. And second is, this step up in gold demand, which is probably breaking a lot of historical correlations. Ordinarily, you would not see 5-quarter, 5-half US cash rates and still this bit of a gold demand. So we think, although in the near term, US bonds are the pain point for global fixed income, over the medium term, this de-dollarization trend, or more importantly, the de-premiumization trend that we are already witnessing, will potentially lead to further narrowing of bond spreads between US and other well-run emerging markets, or other well-run markets more generally. And India is going to be a very obvious beneficiary of those bond flows as well.
All right, so Yash, we'll leave it at that. It was a pleasure speaking with you. Thank you so much for joining us and taking the time out. Well, you're watching NDTV Profit. We slip into a short break, and on the other side, we get you more stocks. Stay tuned in.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Welcome back. This is Hot Money. Well, we are going to take stock of a handful of counters which are buzzing in trade along with the sector as well. To take us through that, we are in conversation with Sharmila Joshi of sharmilajoshi.com. Sharmila, good afternoon. Thanks for joining in. Before I come to you, as usual, let's take up the first stock of the day, and that's Hindalco. We have the latest with respect to its Novelis IPO. Kanika is here with more. Kanika.
Now, in what could have been one of the largest listing this year by an Indian-owned company, Novelis has announced postponement of its IPO due to market conditions. Now, the company has mentioned that market conditions did not support achieving their expected premium outcome, and Novelis will continue to evaluate the timing of their offering in the future. Now, Hindalco had planned to sell almost 7.5% stake in the company with an IPO price band ranging between $18 to $21 per share. Now, including a green shoe option, the total proceeds could have gone up to $1.09 billion. But and on the capex front, Hindalco had planned to spend rupees 6,000 crore in this financial year. But without the IPO proceeds, Hindalco might need to explore alternate funding sources or will need to reconsider the scale and timing of its capex projects. Coming to valuation, the IPO was targeting a valuation of almost $12.6 billion, attributing two-thirds of Hindalco's market cap to Novelis. But because of the IPO coming in, the SOTP value ascribed by brokerages, which was almost 790 to 850 rupees per share by Motilal Oswal and Anand Rathi respectively. Now, per share value of investments given by them was rupees 49 and rupees 37 respectively, which includes the share of Novelis. Now, and at the upper end of the IPO band, there was a valuation premium. That premium has escaped even though Novelis stays in the business now. Now, the particulars of all of this is a big question mark.
A question mark indeed. Kanika, thank you so much for that update here. Sharmila, I'm sure you've been tracking the Novelis IPO and the updates here. We did see Hindalco take a very, very sharp cut earlier in the day today, but it has recovered from day's lows. But let's look a little bit more long term. What's your assessment of this aspect here?
So clearly, as you all were just discussing, that premium is now off the table, and what it simply means is that you have to continue to look at Hindalco and its valuations the way we would have without this IPO being in the picture. And then if you look at it from that perspective, it looks a little expensive. So while I do like the business and I do like aluminium as a metal, and I'm absolutely positive that the kind of usage that the metal sees is only going to increase in the domestic context. The fact that this IPO has been shared will sort of mean a near-term hit until we have clarity on when they're planning, what's the new plan for the IPO. So I think as of now, you will just sort of see the stock maybe a little sideways because I think it's already a little expensive.
Okay, there you have it. That's a view on Hindalco. And from there on, we move on to Hero MotoCorp. Now, we are deciphering from many notes and many analysts at the moment that Hero MotoCorp has been just a little bit lagging with respect to its peers, and it does seem like there's a little bit of catch-up play going on. But I'm going to say no more and get in my colleague Puneet to tell us more about Hero MotoCorp. Puneet.
Yeah, thanks for that. So it's being looked at as the proxy consumption play post, whatever we've seen in the elections yesterday. And valuations are supportive for the company as well. But let's see what the brokerages had to say. They are recommending the stock as, one of the top rural themes to play, as well as one of the top defensive stocks to look at post the crash yesterday. We've seen Citi adding Hero in its model portfolio as well as it sees it as a proxy play in consumption, while Phillip Capital, Prabhudas Lilladher are also adding the same. We've seen MK also come out with a note this morning where they did mention that they are preferring Hero over TVS Motors, and this is purely because of valuation. The stock is trading at just 20 times price to earnings versus 26 to 30 for someone like a TVS as well as Bajaj Auto. But what's essentially working for the company is its new launches that the company has done over the last 12 months. Do know that they had just 2% market share in the premium space. So they've addressed that with the new Charisma, as well as the Maverick, as well as the Harley Davidson, which has been in the partnership with the US company. So they are addressing the pocket spaces. Another key problem which is the 125cc segment. Now, do know that the company had roughly 40% market share back in 2021, which got halved, and now they have just 17% market share in this 125cc segment. We've seen Honda Motors being one of the largest market players here, as well as TVS, as well as Bajaj Auto with their new launches of the Pulsar. So they are regaining market share, and they've launched the 125cc Extreme to address any kind of product gaps that might have. So fundamentally also the stock has been doing pretty well. The market share revival, as we spoke, they are looking to gain some market share across the categories. And we've also, the one other thing is that in Ather Energy, they have roughly 37% stake, and according to MK, that works out to rupees 59 per share of the investment value. So apart from just the launches, the company's positioning in the market is one of the key triggers, and valuations has been cheap compared to the other players. Back to you.
Okay, fair enough, Puneet. Thank you so much for those updates here. Sharmila, your view on Hero MotoCorp?
Well, I think that what you said earlier is what I agree with, Agam, that there is a bit of a catch-up happening. Because we've seen TVS Motors sort of trade much higher, Bajaj Auto, and Hero Motors was somewhere lagging behind. There was a little bit of bad news, etc. So you've seen the stock sort of, or rather buying shift to the other two-wheeler plays which are listed. And now I think that currently the way you see the numbers or you evaluate the stock, you do get the feeling that exports seem to be back on a good track. Then they have exposure in both the premium segment as well as the entry-level segment. So, everything seems to be working well for them. I think even in the numbers, you could see that reflection of better export numbers, etc. So I think that that's the sense market is getting, that it is a little undervalued as compared to the other two. And two-wheelers is a space that I like. So yes, I think that this sort of move that we are seeing on Hero Motors, especially in the current political context, will sort of has more legs to, I think it will go further.
Some more important updates coming in from the political scenario, and this time we have commentary coming from Sharad Pawar, and he's saying that I have not contacted Nitish Kumar or Chandrababu Naidu, and this actually could potentially mean, at least in terms of our understanding, a further strengthening of ties between both JDU and TDP with the BJP for the formation of for another NDA government. Again, there's been a lot of reports suggesting who's been contacting who, but we have a clarification from Sharad Pawar at the moment, and moreover, he's also said that there will be some other strategic decisions which will be made in the meeting today. But this is the latest that we have with respect to Sharad Pawar, suggesting that once again, he has not contacted neither Nitish Kumar of JDU nor Chandrababu Naidu of TDP. Well, with that, I'm going to take a moment to thank Sharmila for joining us and taking us through, these two stocks which we needed to discuss. But we shift focus to the Adani Group once again. Speaking at the sideline of Adani Group's new co-branded credit card launch, Director Jeet Adani talks about the company's strategy behind Adani One and their foray into financial services. Listen in.
This idea sort of came up when we were looking at what we can do in terms of creating a unique service proposition for our customers, and this was one piece which we hadn't cracked. We were working on all the other stuff around the airport services, around utilities. And that's what the idea was, how do we tie in this piece around finance. This isn't the complete solution. We also put a caveat to that. We are working on a couple of more things which built into creating a full stack fintech solution. But it's definitely a huge first step. Just having the ability to give consumers one is credit along with ICICI, but also being able, allowing them to generate points, be a part of our loyalty program, and the early traction that we are seeing in terms of this, during our research and early phases, is that is going to be a very strong pillar for us.
All right. Now, I'll be honest, I use the Adani One app myself, but I just wanted to get a sense from you, this product, this super app, so to say, what is the vision behind this entire thing? Because you're not, Adani Group itself is not really known that much for consumer-facing businesses apart from your food business. Can you tell us a little bit of how this works out?
Absolutely. I think it's all about narrative. We are a very large consumer-facing business. It's just we don't, it's never been seen that way. With airports alone, we did 85 million footfalls this year. And, with Navi Mumbai coming in and the portfolio growing and the organic growth that's happening with the country, we see that this footfall itself will grow to 200 million a year.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Thanks for tuning into India Decides 2024. As we've been saying for the past 48 hours, it will pay to hear what big money is thinking about when it comes to this election verdict and the outlook post that for risk assets, particularly equities. In line with that, somebody that I have very high regard for founder and CIO of ValueQuest Investment Advisors, Ravi Dharamshi Johnson, right now on the show. Ravi, great having you. Thanks for taking the time out. I hope all is well.
Thanks, Neeraj. Pleasure to be here. Yes, all good.
Yeah, okay. And Ravi, no, the pleasure is entirely ours, I must say. Just trying to understand, Ravi, we spoke to you about 48 hours ago. The scene has changed a little bit or quite a bit, depending on which prism you watch it through. What's your sense about what does it mean? I'll come to portfolios in a bit. What's your sense about what does it mean from how would portfolio investors watch investing into India, both global or local as the case may be, because you manage global money as well. So it'll be great to get that sense from you.
Yeah, no, I think first thing that comes out is that democracy is well and alive in India. It's kicking and it's vibrant. Nobody can doubt the EVMs. Nobody can doubt that electorate has a mind of its own. Doesn't matter how much fake narratives or anything that you put at them, they will give a verdict which is in their best interest. So I think that is the big takeaway from the election result. Besides that, I would just say the fact that from an investor's perspective, the government is likely to come back, maybe with coalition partners, but still that doesn't change too many things. So policy continuity and political stability might be a little bit challenged, but I don't see that as a major challenge.
Okay. Well, Moody's doesn't seem to be seeing that either. Their flashes on your screen suggest that they believe that the NDA win suggests India policy would continue. Fiscal metrics, they say, to remain weak. Okay. We'll wait for some more flashes as well. But keep in mind, rating agencies and what they say would be extremely important in the near to the medium term. Ravi, so therefore, are you saying that on most macro accounts, be it the fiscal glide path, be it the policies that have been towards Atmanirbhar Bharat in a lot of areas, the capex thrust, etc., to your mind, those would continue?
So I have no doubt those thrusts will continue. But even before we get into that, even prior to the election, our view was that central government's ability to push the envelope on the capex cycle is getting more and more limited. It would not be them that would be carrying forward the capex cycle, but it would be the state governments as well as the private sector that has to take the gauntlet from here and move the capex cycle forward. And I do believe, just like 2004, there was a regime change, but that did not stop the cycle. Cycle continued. I do believe even today, in fact, today even government hasn't changed. The cycle has been put into motion, and that cycle is unlikely to change, even if there was to be a government change, but which is not the case. So even lesser reason to believe that there will be a change. However, having said that, can there be some incremental, noise or focus on rural, agri, supporting the bottom of the pyramid? I don't rule it out. In fact, I believe there is a need for that. Just a free grain scheme is not good enough to support that. And we should see some more, more actions being taken to support the bottom of the pyramid.
So, okay, Ravi. So, yeah, no, please finish your point.
No, so without compromising on the fiscal glide path.
Okay, so fiscal glide path remains as is. Now let's try and focus on what could this mean from a portfolio construction perspective. Ravi would love to understand that. How was the construct of the portfolio pre-verdict? Because I heard you say that even ahead of the election verdict, you thought that the government thrust on capex could be limited. So did you moderate capex bets if you had them? And if not, would you look to do them now? Because there is an opportunity that may come up in the minds of the market, albeit right now, for consumption, etc., because the market may in its wisdom want to believe, as you said, that you believe too, that there is a need and possibly a policy thrust towards rural, towards consumption, which brings about maybe investing opportunities in those spaces?
Yes, absolutely. As I was mentioning, within capex, it's not like the capex cycle comes to an end. It's just that companies and stocks dependent on central government are the ones that are going to face challenge. Also, there are some areas which were witnessing euphoria. I think that euphoria will die down. And you know what we are talking about. We are basically talking about the public sector owned units, maybe defense, maybe some really leveraged plays on infrastructure, or companies which are perceived to be close to the government. All those kind of companies might have a challenge from going point forward. But if there is a company which is catering to the private capex cycle, that is unlikely to have any kind of an issue. So we actually focus on, even within the capex cycle also, we try to see how much of that is B2G and how much of that is B2P, if I were to say. Coming to the consumption, yes, incrementally, there will be some amount of shift happening. And even again, this was also prior to the election results. There was a need, there is a need, pressing need to support the bottom of the pyramid. And I think that will happen. Whether that, how fiscally indisciplined we are in giving that thrust remains to be seen. But I would err on the side of guessing that they will not be compromising on the fiscal discipline despite that focus on the bottom of the pyramid. Now, from a portfolio manager's perspective, what we are looking for is signs, triggers, reading the tea leaves that tell us that, okay, the regime in the market is changing. Two factors usually that go into it. One is, of course, the valuation. And second is that there is an outlook that has just changed for the better. So from valuations perspective, I can't say that the valuation in the consumption space are very, very cheap, and doesn't matter what happens, one should be placing a bet over here. But relatively, they had become better as compared to some of the capital goods play. Some of the consumption plays were relatively better. Second, not too much of money has flown into this sector. So if the money flow continues, it will find a space to hide in these areas. So from that perspective, a relative outperformance has already begun, but whether that leads to a sustained absolute outperformance, that will depend on some of the presumption that we have regarding the fiscal imprudence panning out.
Okay. So, Ravi, just sticking with that point for a bit before I move to some of the others, and I'm not including defense, not including PSUs currently, that's coming up. But first this, prior to this election verdict, some of the private capex beneficiaries as well, the valuations had moved up quite a bit. A lot of people said that if FMCG trades at a particular valuation, why can't some of these companies also do? Because the order flow seems good. Some of them are MNCs, great moats around the business, longevity of growth, so on and so forth. Now, I heard you say that central government trust beneficiaries might get impacted, but private capex beneficiaries might not. But capex as a theme, if it is coming under a little bit of a, not a question mark, but a bit of a tempering, would some of these expensive MNC stocks or some of the private capex linked stocks as well cool off? And would maybe FMCG, which is naturally not cheap per se, but cheap relative to only its own history, be able to gain at that expense?
So that would be the base case.
Okay.
Doesn't mean, from a long-term investor's perspective, a 6-9 months of underperformance or relative underperformance should lead to a dramatic change in the portfolio. In my opinion, see, the drivers of some of these private capex cycle are not dependent on the government. For example, the money that is being spent on energy transition worldwide is not dependent on which government comes at the helm. Yeah, surely there will be some prioritization and reprioritization, but as humanity, there is a pressing need to enforce the energy transition. Now, within energy transition also, if we actually have to ensure that we do this energy transition successfully, then the power transmission capex there is no choice. We have to lay that out, and it has to happen in the next 5-7 years. So the drivers are not changing, and these drivers are well and truly in place. So can it lead to a quarter or two of delay here and there? I can't rule that out. But if you're thinking 3 years, 5 years, I don't think there is a need to dramatically change or move away from, say, for example, power transmission capex theme.
And Ravi, just one follow-up to that before we take a break as well, or maybe a couple of questions before the break. But on consumption, the last 24 odd months, what had gained was this premiumization theme. The K-shaped consumption pattern really ruled the roost. Now, if indeed staples and some of the rural consumption focused stocks make a comeback, does the premiumization story come under question mark, or that story also continues and gains or keep the premium multiples, if you will?
So I wouldn't see, there are two parts to it. One is whether the companies will continue to grow and whether the earnings will continue to grow. I think there is reasonable certainty that earnings will continue to grow for these companies. But the second part of the equation is the valuations. Valuations had captured a lot of that growth. So from a relative value perspective, I think getting into plays which cater to the bottom of the pyramid will probably yield better returns over a 3-5 year horizon than getting into companies that are catering to the premium end of the segment. But having said that, I don't see premium end of the segment faltering in a big way based on what we have just seen.
Well, Ravi, stay on, so much more to talk about. We'll try and talk about 2 or 3 more themes on the other side of the break. Last 4 years, PSU banks have outperformed the private banks by a country mile. YTD as well, PSU bank index much higher than what the bank Nifty has been as well. Can that change too, with PSUs maybe running a bit afoul in the minds of the investors? We talk about that. We talk about pharma and chemicals, and maybe some more with Ravi Dharamshi of Value Quest on the other side of this very quick break. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell?
Welcome back to India Decides 2024 in conversation with Ravi Dharamshi. He's already laid out that fiscal consolidation remains on track, maybe a slight shift towards spending, towards different kinds of expenditures, and most things will not really have a big change. CapEx push might continue, even if accelerating government spending might be a bit of a challenge, and no immediate risk to the fiscal deficit target in his view. But we were talking about before the break, or at least I was pointing towards a chart about what's happened to PSUs versus private, specifically in the banking space. And there has been a rank outperformance, not just YTD, of course, over the last 4 years, but this is the YTD chart, and clear outperformance even after the sharp fall that we've seen in the last 2 or 3 sessions. Ravi, I want to come to you. I want to start off with the lenders, because I did hear you say that some of the premiums that were attached to maybe some of the PSU companies might also come off, if I'm not wrong. My question to you is this: 4 years of outperformance, everybody believes this will continue. Does that come into question mark? 1, because of fundamentals, and 2, because of risks at the horizon, right? I mean, do loan waivers come back? What have you? I mean, there are multiple things out there.
Yeah. No, I definitely do belong to the camp that thinks that this year the men will be separated from the boys. And I believe the entire trade in the PSU, especially the banks, was related to the fact that, we had no NPA cycle had kind of bottomed out, and the growth was very high. But now if you look at the balance sheets of these PSU banks, they are all stretched. Their ability to draw deposits, their ability to raise equity, both are still very questionable. And I think this year, now maybe with some amount of circumspect coming into the market, it might not be so easy to raise funds at the valuations that they are trading. When they were trading at a much cheaper valuation, ability to attract capital was far, far better. So in both the scenarios where whether you are competing with the private banks for raising capital or drawing deposits, both the things, I would give private banks a better ability to do that. So in that kind of a scenario, I think then finally the shift will start happening. That is the fundamental reason. The technical reason is, of course, that FIIs have been sellers in the market, and naturally IT and financials are the 2 spaces which are most owned, because these are the 2 largest pockets in the large cap space. Going forward, I feel, even within IT and financials, it's been the financials that has borne most of the brunt, and probably couple of the large private banks being in a transition phase hasn't helped the cause. Going forward, that should change. And because these remain strong franchisee, I think people making a case that they are permanently shifting from a 20-25% kind of a growth to a 10-15% kind of a growth, and hence the derating in the multiples, I think they are missing the big picture. I think we are still relatively very, very small in terms of the size of the economy and in terms of the bank size in the context of the economy. So I would not rule out a higher growth in GDP and then a higher multiplier for some of these banks to grow, and growth along with profitability. The ability to go to 18-20% kind of ROEs does exist for a lot of these banks. And if that is the case, then my bet would be definitely from the next 3-5 years perspective on private banks rather than the public sector banks.
Okay, will we see the reversal of that is the question. Ravi Dharamshi believes his bets are out there. The other aspect, Ravi, everybody was completely focused around domestic focused themes, and maybe the growth is still going to be, in fact, I would presume that growth will still be stronger in India. But do you take some bit of a global exposure? Chemical stocks haven't gone anywhere for so many months or quarters or years, if you will. You track pharmaceuticals so well and so closely all through your life. Do you take exposure to some of those globally linked themes, even IT for that matter?
Large IT services, I would leave out. But from an otherwise perspective, just the fact that chemical companies have not done anything significant over the last 3 years, and the larger theme still remains where we replace China as a partner, maybe a second partner in terms of the global supply chain. Yes, that trend remains intact. valuations are now getting to a point where they're starting to make much more sense than they were 3 years back. Just to give you a statistics, in the year 2021, India added some 60-70 billionaires. Out of that 60-70 billionaires, probably 80 to 90% of those billionaires were from the chemical industry. Now, when that kind of a wealth creation has happened in an industry, obviously we are looking at the rear view mirror. And what followed in the next 3 years is for everybody to see. We saw the margins compressed dramatically. We saw China coming back into the market and dumping a lot of the product. So now, going forward, the chemical theme, I think, rather than take a top-down view on chemicals, it should be a more bottom-up view. Which are the companies that have the ability to withstand Chinese competition? Which are the ones where the valuations have corrected and the fundamentals have bottomed? Those companies I would like to place a bet on, and because the relative as well as absolute valuations are now looking favorable.
All right. I have maybe a set of two final questions, do you believe that the focus shift, I think, if I'm not wrong, focus shifts from capex to revex? I would love to understand what goes behind that thought.
No, so as I mentioned, finally the dollar that government has to spend is limited. Central government has been carrying the burden in terms of the capex cycle for the last 4 or 5 years. Now the government's ability to spend more on the capex is going to be limited. Also, see, you have to see that it's not that you can generate infrastructure project out of thin air. Doesn't matter how much your intent is to push the capex cycle. It takes time because conceptualizing large projects, bringing them to life, and then funding them takes a lot of time. So from that perspective, and some of the dollar will be spent more towards the revenue expenditure, which basically ties in with the fact that the government probably did not read the writing that the bottom of the pyramid is suffering. They are looking for some more support besides just free grain scheme. So from that perspective, some amount of support needs to come. Second, I also do believe that government has the elbow room, especially on the GST front, to cut rates. This might not exactly address the bottom of the pyramid, but more the urban middle class. But I do believe that we are reaching a stage where some rationalization of the GST rates should be on the card. Again, this is not a decision which only central government will take, but those kind of things should give further legs to the revival of the consumption in the economy. And consumption and services are a large part of the economy, and they have been kind of, I won't say neglect is a very strong word, but not been the priority of this government.
Got it. Ravi,
the focus has always been on supply side reforms. I think some of that needs to shift to creating the demand as well.
Got it. Fair call. My final question, Ravi, you very well say that all of this opens up more sectors, companies in other sectors to look forward to as well. I would love to understand. So one is well understood that consumption, rural consumption, etc., may get a look in. What happens to the agrarian space? Because that is, again, a space that has hurt quite a bit in the recent past. Is there a policy move that could help agrarian, or could there be a natural cyclical up move there?
Both, I think, secular as well as cyclical up move are in the offing over there. And I believe if we have to point out one failure of this government over the last 10 years, I think it would be that they have not managed to double the farm income. The intent was all there. Of course, a lot of it is probably to do with the fact that they could not move ahead with the farm reforms farm and agri reforms that were planned. But having said that, there is no choice for this government in this particular term to ensure that the farm income doubles. And that the cycle turning, monsoon being normal, and some amount of maybe MSP support, maybe wealth effect through gold and land prices rising, all of that should give rise to the income as well as wealth effect, and hopefully we are able to do well at the bottom of the pyramid. We need to reduce that income inequality that's been the cause for problem for the last few years.
Ravi, splendid talking to you today. Thanks. An overarching view on multiple things. Great picking your brains, and thanks for your time.
Thank you, Neeraj. Glad to be here.
Yep, no, the pleasure was ours. And viewers, thanks for tuning in to India Decides 2024. Important to attack it from multiple views. And I think in the last half an hour, we had a very large money manager talking about how he thinks about this election verdict and investing implications. Thanks for tuning in.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome. You're watching Market IQ. The big breaking news coming in is that the new government is likely to be sworn in on June 8th. We'll get you more details on that shortly. Let's take a quick look at where the markets are at first. Well, we're seeing signs of recovery both in the benchmarks as well as in the broader markets. The Nifty 50 as well as the Sensex are currently up by about 2%. The Nifty 50 up by almost about 475 points. Let's have a look at some of the key indices, some of the key movers and shakers in the Nifty 50. Hero Moto, Tata Consumer, HUL, IndusInd Bank and M&M are some of the names that are up by 5% or plus. But what's truly moving the Nifty 50 is HDFC Bank, ICICI Bank, Infosys and M&M again. And what's not performing particularly well and being a little bit of a drag, though not too much, is L&T, Power Grid, SBI and BPCL. Let's also have a quick look at some of the sectoral indices. It's a little bit of a mixed bag there up today. While FMCG, consumption, pharma, auto are all in the green, anywhere between over 3.5% to almost 5%. It's just actually PSE that's currently in the red, and that too only marginally. So we are seeing signs of recovery. What we remain to see is whether these signs persist, or whether it's a little bit of a dead cat bounce, but we will find that out later. Let's also have a look at how the broader markets are performing. The Nifty Mid Cap 150 is up by 2.5%, while the Nifty Small Cap 250 is up by just as much. It's up by 2.5%. Let's also take a quick macro check. Now, after everything that's happened yesterday, we did see the BJP come in, but not with as much of a majority as was expected. We did see the NDA too get the majority and get the numbers that it needed, but that too was underwhelming given the numbers that were expected and given the exit polls. That has led to some key concerns. Will fiscal consolidation continue? Will populist spending see an uptick? Will tougher reforms now be pushed out in the third term of the government? Well, for now, what we're gathering is that the base case is medium to long-term India views remain intact. India's growth trajectory is expected to continue to stay strong and resilient, and the government impetus and focus on macro prudence and macro stability is set to continue. In the past, the largest winning party has seldom got over 200 seats and still formed stable coalitions, many of which have undertaken important reforms. That's what HSBC had to say. They also said that they expect some easy reforms that the Modi government has been spearheading, such as, of course, the thrust on public capex to very much continue, and their base case still generates about a 6.5% growth potential for the Indian economy. What they also said that most reforms were via executive action. So slower legislative process, if that is the case, may not have as much of a detrimental impact as is being feared. Welfare spending could rise, they agree. Gradual fiscal consolidation is likely to coexist, especially given the tax growth that's been strong. The economy overall appears to be in good shape in terms of growth and stability. That's the commentary that came in from HSBC. Now, of course, some of the key events to watch out for some more clarity, especially on the macro situation, is of course the government and cabinet formation over the next few days. The RBI policy, which is still very much expected to be a status quo, but we could see liquidity conditions soften and improve thereabout, especially given that government spending is set to resume. What we're also going to be watching out for is the trajectory of the southwest monsoons and its equitability. So far, that's definitely been a positive. And last but most important, the budget. The government is likely to present the budget early July, and that's going to give a lot of clarity in terms of the macros. The higher than expected RBI dividend transfer could possibly create some space for populist spending and to drive consumption. We're also going to be watching out for whether the government does announce any cash transfers maybe, or now provides a greater thrust to rural spending, or rationalizes income tax. It is likely to also continue its affordable housing thrust, and most importantly, what it has to say on capex. So far, the commentary does indicate that the government's thrust on capex is very much likely to continue. What we're also going to be watching out for is, of course, reforms and the trajectory that takes going forward, especially the slightly harder reforms in possibly sectors like agri. On others like maybe labor laws, that could still take place, but the next set of reforms might likely disappoint. That was one of the views that came in from UBS. Now, if you look at a slightly longer term, issues like employment creation remains a challenge. The government's policies to push manufacturing and construction, we are likely to continue to see the thrust on that, but we do know that the returns on those are not expected anytime immediately. In addition, the perennially in distress agri space and of course, like we mentioned, the inability of the government to have implemented reforms there in that space does remain a key challenge. That's also what Bernstein had to say. Just a while back, we also got in a commentary from global ratings agency Moody's. They've also said that it does look like it's policy continuity for now, especially with regards to budgetary emphasis on infrastructure spending and boosting domestic manufacturing to support economic growth. But India's relatively slim margin of victory that we've seen by the NDA may delay more far-reaching economic and fiscal reforms that can impede progress on fiscal consolidation as well. India is projected to grow faster than other G20 economies, up until at least FY26, but near-term economic momentum does mask structural weaknesses, and that can pose risks to the long-term potential growth. That's what the ratings agency had to say. We also spoke to Aurodeep Nandi of Nomura on the policy reforms and the bond trajectory. Listen in on what he had to say.
In terms of policies and in terms of whether there's be a fiscal cost to it, I think the BJP would have to do some soul searching into what's behind this result. If there are issues like unemployment and inflation, which by the way had come up in opinion polls before the elections, and if there's need to course correct there. But having said that, our baseline view is that there's not going to be a massive sort of diversion away from macro prudence that we have currently. Growth with macro stability has been a consistent mantra of the government, and it has paid dividends. We've had S&P change its outlook to positive for India. A big part of that is because India's fiscal glide path is sort of more credible now than it was in a long time. So all of that, I think, comes on the back of very sound policy making. So I don't think that there will be a complete reversal of that.
Well, growth with macro prudence, that's been the mantra so far, and it's unlikely that it will change. For more on that, I'm in conversation with Samiran Chakrabarti, Chief Economist, Citibank India. Samiran, thank you so very much for taking time out for us. It's a pleasure to finally have you with us here.
Thank you so much. Thanks for having me.
So, Samiran, to begin, I do want to understand that, we've been talking about policy continuity, but maybe with a little bit of tweak here and there. Also, given the mandate that we saw in terms of numbers yesterday, in the upcoming budget, would you expect the government's thrust to change a little bit, maybe more focused spending on rural? What are your thoughts on that? Will we also see slightly more populist spending? How are you looking at it at this point?
So first, we have to understand the context of the budget maths also. The big context is that the government has got a much larger than expected RBI dividend. The fiscal deficit for FY24, the year gone by, is now 5.6% rather than the 5.8% that people thought before. So in that sense, meeting the interim budget's target of 5.1% of GDP fiscal deficit doesn't look to be a very difficult task for the government. In fact, even after meeting that target, they might have some fiscal space to do a bit of so-called populist spending. In fact, we don't expect them to cut back on the capex spending that they had announced in the interim budget. So for this year, this is not that big a problem. Both can continue. If at all, what markets would want more clarity on is the fiscal glide path that the government had projected, whether the government wants to stick to that sort of a fiscal glide path or wants to calibrate this in any way. That's something which on the budget day would probably be a more bigger discussion point than just the FY25 number.
Okay, all right. Samiran, I do want to understand, we have been talking about a lot that's going right for the Indian economy, but at the same time, possibly sort of the trickle-down effect the government would have hoped for, not particularly playing out there. Do you think that that is the case, and do you think there is need for more concerted measures there in terms of maybe employment generation or inequality?
So one thing we have to understand is that how politically the BJP would look at these election results. If you look at how the distribution of BJP's losses in seats have been, that's entirely concentrated in just 4 states. And it is not a pan-India discontent that they're facing, or there is any sign of pan-India distress. If that was the case, then BJP wouldn't have won in 2 additional states' legislative assemblies. So if that's the assessment, then there is no need for a large-scale tweaking of the economic model that they have been following. Yes, you could always argue that the focus of the government has been a lot more on the supply side reforms. Maybe at this juncture, they have to do a bit more demand side. And when it comes to that demand side, yes, employment generation could be one of the things. We have to understand that the government has taken 250 million people out of poverty in the last 10 years. Now this cohort has to be taken to the next level. And in our view, that can happen with a right combination of skill development and access to credit. That would make these people move to that next level, which would create demand, and we would have a more balanced growth model. So we are not necessarily suggesting a model of just inducing more cash subsidies, but more of employment generation through skill development and credit access for the bottom of the pyramid.
Right, so the fiscal deficit target, at least for the ongoing fiscal, unlikely to see much of a change. India's growth potential more or less intact. But I do want to understand how you're viewing the issue of maybe slightly longer term reforms, especially the more challenging ones. Do you think those will be harder to implement? What about the labor codes, might be slightly more low-hanging fruit in comparison, but how are you viewing reforms at this juncture? What is the outlook on that front, and what is the impact thereon?
So yes, there are bigger structural reforms that this particular NDA government has tried in the past without that much success. So there was an anticipation in the market that if NDA gets a larger majority, then some of these things could be prioritized. Now, obviously, the priority now would be to establish the cohesion and credibility of the new coalition. And to do that, you cannot jump into contentious reforms which could throw out winners and losers in the society. Any change often creates dissonance of its own. So I suspect that these things could be deferred a little, not because the government does not have numbers. Most of these reforms can be done through simple majority in the parliament, which the government will likely possess. And some of them, like the one that you mentioned about implementation of the labor laws, is more of an executive action rather than legislation. Legislation has already been passed. So it's not a question of the ability to do so, it's more the willingness to do so that might, for the time being, not being in place. We don't think that this is, at this moment, affecting our macro forecast, whether it's growth or inflation, in any meaningful way. Yes, if they are done, then probably there is upside surprise possible on India's potential growth estimates. But for now, that 7 to 8% kind of growth could be maintained even if these structural reforms get deferred a bit.
All right, Samiran, one quick question regarding the upcoming RBI policy before I can let you go. While the expectation is, of course, of a status quo, do you possibly expect a change in stance, though that too appears unlikely? Also, going forward, can we finally expect some easing in liquidity conditions? Any other expectations from the policy on Friday?
Look, we have to understand again the context here. The context is that there's been a new variable that has got into play, which is a bit of political uncertainty and policy uncertainty. That has created some volatility in all asset classes. In that sort of a backdrop, I don't think the RBI would be keen to provide more impetus to that volatility by changing things around. So this is a time to keep things under check, to provide confidence to the markets that the RBI will keep things very orderly in conditions in place. So I suspect that in this June 7th policy, it's going to be no change on not only the rates, but also on the policy stance. There are anyway not just domestic uncertainty, but enough global uncertainty as well. On the liquidity question, the RBI has now been managing liquidity in a way that the overnight rate is closer to the repo rate rather than closer to the MSF rate. That policy will continue. In fact, what is going to be interesting to see is that once the new government is in place, the backlog of spending, which was not done over the last 2-3 months, and the government is sitting on this huge surplus provided by the RBI, when that money gets spent, whether liquidity will improve too much, forcing RBI to calibrate liquidity in a way that the overnight rate comes down to 6.5 again.
All right. Thank you so much, Samiran, for taking time out for us. And we do hope to have you back again with us soon. With that, it's time to slip into a short break. Do stay tuned. There's lots happening in the national capital today. TDP's Chandrababu Naidu has reaffirmed support to the NDA. We'll bring you more details on that on the other side. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dream?
Welcome back. You're watching Market IQ on NDTV Profit. Let's take a very quick look at the markets once again. The Nifty 50 as well as the Sensex continuing to show modest signs of recovery there. While the Nifty 50 is up by about 500 points, the Sensex up by about 1600 points. The Nifty 50 in the green by 2.4%. Let's also take a quick look at the key constituents of the Nifty 50 and how they continue to perform. We've of course seen more advances than declines on the Nifty 50 today, and what's led the benchmark is HDFC Bank, ICICI Bank, M&M and Infosys, while HDFC alone has contributed almost about 75 points to the benchmark. Banks are continuing to perform well. But moving on, sources have told NDTV that PM Modi and the new government are likely to be sworn in on June the 8th. All eyes are of course on Nitish Kumar and Chandrababu Naidu, NDA allies who are now in Delhi to meet with the BJP top brass. Naidu, who's set to take his oath as Chief Minister of Andhra Pradesh for the 4th time, earlier spoke to media persons and reiterated his commitment to the NDA.
We are in NDA. I am going for NDA meeting. In course of time, anything we'll report to you. Thank you.
Right, we've also seen visuals earlier today of Nitish Kumar and Tejashwi Yadav traveling in the same flight to Delhi. Nitish Kumar will attend the NDA meeting and Tejashwi will attend the India Alliance meeting. Now, for more on the political action that's unfolding in Delhi, I'm joined by Vikas Singh Bhadoria of NDTV India. Now, Vikas, the new government will take oath on June the 8th. What have you been picking up on that? Vikas, I hope I'm audible to you. So the new government is set to take oath on June the 8th. What are you hearing? What have you been picking up on that?
के सूत्र हैं उनका ये कहना है कि 8 और 9 जून को 2 दिन महत्वपूर्ण शुभ मुहूर्त है और इन दोनों दिनों में किसी एक दिन शपथ ग्रहण हो सकती है, लेकिन जो सबसे मुफीद मुहूर्त है वो 8 जून का है, शाम को 4 बजे से 6 बजे तक के बीच का है और दिन में 11 बजे से 1 बजे के बीच का एक अभिजीत मुहूर्त है जिसमें शपथ ग्रहण समारोह हो सकता है। लेकिन उससे पहले बीजेपी को एनडीए संसदीय दल की बैठक बुलानी होगी जिसमें सभी सांसद एनडीए के मौजूद होंगे और वो प्रधानमंत्री नरेंद्र मोदी को संसदीय दल का नेता चुनेंगे। उसके बाद औपचारिक रूप से सरकार की गठन की प्रक्रिया शुरू होगी। एनडीए के कुछ बड़े नेता प्रस्ताव को लेकर, सरकार बनाने के दावे को लेकर राष्ट्रपति के से मुलाकात करेंगे और उसके बाद राष्ट्रपति नई सरकार के गठन के लिए सबसे बड़े दल या गठबंधन को सरकार बनाने के लिए आमंत्रित भी कर सकते हैं और उससे पहले दावा मिल जाता है सरकार बनाने का तो उसी पर विचार करके सरकार बनाने के लिए आमंत्रित कर सकते हैं। तो इस तरह से 8 जून को शपथ ग्रहण समारोह होगा और प्रधानमंत्री नरेंद्र मोदी तीसरी बार भारत के प्रधानमंत्री के तौर पर शपथ लेंगे।
विकास, चंद्रबाबू नायडू ने रीअफर्म किया है अपना सपोर्ट टू द एनडीए। वी सॉ विजुअल्स एंड वी डिड हियर फ्रॉम हिम टुडे मॉर्निंग। जेडीयू के कैंप से क्या सुनने में आ रही है?
जेडीयू की तरफ से जो बातें उठ रही हैं वो उनकी एक बहुत पुरानी मांग है और वो है बिहार के लिए विशेष राज्य का दर्जा और स्पेशल पैकेज की मांग। ये नीतीश कुमार की वर्षों पुरानी मांग है। इसको लेकर वो बीजेपी से अलग भी हुए और फिर वापस भी जुड़े हैं, लेकिन इस बार जो गठबंधन है वो अलग शक्ल में है। बीजेपी यहाँ पर पूर्ण बहुमत की स्थिति में नहीं है। ऐसी सूरत में जो बार्गेनिंग पावर है वो जेडीयू की बढ़ गई है और ये जेडीयू की तरफ से कहा जा रहा है कि उन्हें बिहार को विशेष राज्य का दर्जा या स्पेशल पैकेज दिया जाए और साथ ही साथ जो मंत्री पद को लेकर मांग होगी वो अभी स्पष्ट नहीं है। लेकिन पिछले 2 गठबंधनों में बीजेपी नीतीश कुमार मंत्री केंद्र में उनके मंत्री नहीं बने थे। ऐसी सूरत में ये देखना होगा कि वो कितने मंत्री पद मांगते हैं। टीडीपी की तरफ से मांग साफ आ चुकी है,
ये
एक मंत्री पद चाहती है।
ओके, सो सोर्सेज ने एनडीटीवी को ये भी बताया है कि नायडू ने 5 मिनिस्ट्रीज की मांग की है। ऐसा कोई सिमिलर डिमांड जो जेडीयू की तरफ से भी आ रहा है?
ये अभी तक जेडीयू की तरफ से स्पष्टता नहीं है कि वो कितनी मंत्रालय चाहते हैं, लेकिन आमतौर पर ऐसे गठबंधन जब भी बनते हैं तो एक फॉर्मूला तय होता है कि कितने सांसदों पे एक मंत्री पद दिया जाएगा। 2014 और 2019 में जब सरकार बनी थी तो 5 सांसदों पर गठबंधन दलों को एक मंत्री पद का प्रस्ताव दिया गया था और उसको गठबंधन दलों ने माना भी था। इस बार ये देखना होगा जब एनडीए की बैठक होगी तो वो कौन सा फॉर्मूला इजाद होता है जिस पर मंत्री पद दिए जाएंगे। अभी टीडीपी 3 सांसदों पे एक मंत्री पद चाहती है, लेकिन अगर फॉर्मूला 5 सांसदों पर मंत्री पद का बनता है तो वही फॉर्मूला जेडीयू पर भी लागू होगा और अगर 3 सांसदों पे एक मंत्री पद का फॉर्मूला आखिरी में समझौते में आता है तो फिर यही फॉर्मूला जेडीयू पर भी लागू होगा और बाकी घटक दलों पर भी लागू होगा। उसमें महाराष्ट्र के जो शिवसेना एकनाथ शिंदे का गुट है उस पर भी लागू होगा। इसके अलावा छोटे छोटे दल हैं जो पूर्वोत्तर राज्यों से आते हैं। जीतन राम मांझी 1 सीट लोकसभा खुद की जीत कर आए हुए हैं, वो अलायंस का पार्टनर है। तो तमाम घटक दलों पर वही फॉर्मूला लागू होगा, लेकिन ये देखना होगा कि एनडीए की बैठक में किस फॉर्मूले पर सहमति बनती है।
बिल्कुल विकास, थैंक यू सो मच फॉर taking this call and we will come back to you as the situation evolves. That's all we have on the show for now, but do stay tuned to NDTV Profit. It is a busy day here.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
welcome to this very special edition of the Mutual Fund Show. I'm Tamanna Inamdar. We're talking today about the elections and what you do with your mutual fund investments post the elections. Now, when any new government comes into power, they talk about their 5-year plan. They want to set their agenda, their policies for the next 5 years. We thought we'd take a cue from this and help you set your 5-year plan for your investments, your outlook, and look at what you should see. Now, for example, sectoral thematic mutual funds have delivered stupendous returns in the last 5 years of the Modi-led government. But as we look at another NDA with a Modi 3.0, but in a stronger alliance formation, should you also be re-looking at your mutual fund investments? How should you decide what schemes and funds to go into? To talk about all of this, I'm joined today by Arnav Pandya, founder of Money Edu School, and Dhirendra Kumar, founder and CEO of Value Research. Arnav, let me begin with you, and thank you so much for speaking with us on the show, as always. Just the sense of time for a re-look. And I know mutual fund investments are, investments with a very long time horizon. I would reckon that in this week of volatility, it's the mutual fund investor at the end of the day who would find themselves safe and sound because they have a consistent, investment, and especially SIP investors. But having said that, what are the big themes that you think should be looked at in the next 5 years?
So if you look at the way things have moved post the election results, it's very clear now that the new government will be an NDA government, and the theme, according to me, is going to be a focus on economic issues, because consistently throughout the campaign, one single factor which has been seen is that Narendra Modi has focused on the point that India's economy has to grow. He is talking about taking it to number 3 in the world and all, but the key point behind this is that a lot of economic steps will have to be taken in order to lift the economy and get it to an even higher plane of growth. So this will mean two things. One is obviously focusing on various infrastructure areas which the previous government has already done, in the sense that you have to continue the pace of building of roads, railways, ports, airports, and other key infrastructure areas. The second is also that there will be a lot of specific focus on areas which are either technologically dependent or which has a high potential in terms of export business, or even in terms of an emerging area. So one thing which obviously Mr. Modi said yesterday in his victory speech was the focus on green energy, electrical vehicles. So all these things, or rather areas like these, are going to receive special focus. So economic agenda with a key boost to infrastructure as well as specific areas is what I'm looking at over the next 5 years.
No, that's an excellent point. Arnav, let me just pull up, and our team put this together. Some of the funds that have performed exceptionally well, the top performing funds in the last 5 years, and we took that sort of last 5 years ambit. And what has done very well is, of course, thematic sectoral funds like we talked about, and we'll put those graphics up on the screen for you. Small cap funds have done very well. And you have some of them with the biggest gainers. So since May 2019, if I look at the top thematic sectoral funds, Quant Infrastructure Fund, 370% return. And then you have a whole host of these thematic sectoral funds which have done well. Let's pull up small cap, mid cap funds as well. So these have been some of the big stories. Now the question is, more of the same? Is that what you expect? If you have new capital to deploy, and if that is what investors are looking at, first of all, should you go upfront at a time when valuations are pretty decent compared to any other time in the past? We have a little bit of recovery today in the markets, but compared to the kind of valuations we were seeing pre-4th of June, things are cheaper. Would you upfront and do a lump sum investment right now, taper it out, or go in for the good old SIP?
No, so one little difference I would like to point out here is that while we talked about what the agenda of the government is, it need not necessarily directly translate into the fact that just because the government is going to focus on these areas, this is where you should go and invest. Because it is highly likely that a lot of these expectations are already built into the price. So in terms of the type of funds that you have to select, I would say that this is now actually the time that if you already have an exposure to these kind of funds, you might want to take a look at what is the weightages that they have in your portfolio. And then accordingly, if it is high, you need to trim it and look towards a more diversified basket. Because what is also going to happen is, and you will see that over a period of time, that while the market has anticipated the fact that a lot of spending is going on infrastructure, valuations have gone up, there are various other parts of the economy which will also benefit once the infrastructure is built. And this could include a wide variety of areas. So in that sense, trying to pick winners is going to be difficult. So it is better to stick to a diversified fund which has a what you call a portfolio across sectors, which will help you in navigating the future. The second part of the thing is also that, see, many small and mid caps have gone very high in terms of valuations. So again, it is time to look at your portfolio in terms of how much is the weightage to these areas within the portfolio and do a rebalancing if it is required. So these are two main things which one needs to focus on in terms of where the potential might be. Now, the second point which you asked in the question, which was whether you should go all in at one go or do a regular investing, my choice is to go in for a regular bit of investing because of the fact that today you might have seen, say, an immediate fall due to the uncertainty on results day. But slowly, as the government takes over, it announces some reform measures because the Prime Minister has been focusing on the first 100 days. Then you immediately have the budget coming up. So you will see more announcements coming in, or it could be more of the same, which is that the announcement made earlier are repeated within the budget. But all these, and over a period of time, you will see quite a bit of opportunities in terms of various corrections within the market. So it is not a very good idea to put all the money in at the present moment. Always go in for a regular stream of investing. That is the best way in which you can benefit from whatever ups and downs that will come in the months ahead.
Right. Arnab, that's a very interesting point, and I just want to also welcome on the show Dhirendra Kumar, founder and CEO of Value Research. Dhirendra, great to speak with you today. And, an opportune time. I mean, we decided to do this show before we knew the results or, what the markets were going to go through. But one way or the other, the idea is to look at what the next 5 years outlook should be for mutual fund investors. What are the kind of funds they should go in for, etc. So let me start with the point that Arnab made right at the end. Many would be tempted, those sitting on cash right now would be tempted to say that let's front load some of our investments, maybe not 100% of it, but a significant portion. Do you think that that's a good idea at all?
No, that is never a good idea. When you are investing for 5 years and more, and maybe, most of your long-term investment, they tend to be anywhere for very, very long period, even though you might be tempted to do a lot of things in the interim, and you will have all these anxieties coming your way. Despite that, I would say that it is always good idea to, have a plan and stay the course. And these are the kind of occasions, the opportunities where it is very important, which helps you stay the course only if you have a plan. Because if you don't have one, you will just be getting in and out of the market at the wrong time. And that is a recipe for disaster, because most of the time our psychology is very much against us. We tend to buy or we tend to invest when it is very inopportune. And we tend to be very fearful when it is very opportune to invest. And the middle path is that to have a regular investment plan, which fits in with which aligns with your income or income cycle or saving cycle, and a withdrawal plan which is aligned with your requirements, which is when you need that regular flow of income. So every investor, the different kind of investor will behave in a different manner. So a new investor who is planning to invest has been waiting on the sidelines because the market was expensive, and you will always get 50 reasons not to invest. because investing is a very difficult thing. Investing is, simply avoid, postponing consumption today. So it's always hard to begin. Likewise, many investors who, started investing in the last 2-3 years, they will be behaving in a different manner. There'll be a lot of anxiety for investors who have, investing for a couple of years or 5-10 years, and they have accumulated something very substantial. They need to, look at their investments very differently. So my approach to all these three kind of investors will be very different.
What about the kind of funds that investors should look at? And this is a question that the market is facing as well. So we were just pulling up, Dhirendra, before you joined in, some of the funds that have done very well. So your thematic funds have been stellar in terms of returns because of the focus of the government, etc. Should investors with any kind of fresh allocations look once again at thematic funds, mid-cap, small-cap funds? What would be your advice in that direction?
My advice will be exactly what Arnav was saying, that diversify your money. That is the only insurance against all the kind of uncertain things that happens. And when you look at the performance over any time period, over any specific time period, whether it be 3 months or whether it be 5 years, you will find that thematic or the sector funds are always stack up at the bottom or the top. And most investors start chasing, most investors start their investment, new investors start their investment by chasing recent performance. That is very tempting. And that is a very, on occasion, it might work out very well in a roaring market or a market which sustains itself. But generally speaking, it is a recipe for disaster. The very reason why you invest in a mutual fund is that you should be able to diversify. And you should be able to diversify with a rider that, the fund manager will exercise his selectivity and you pay all the money, that is the service that you are paying for. And the moment you choose a sector fund or the moment you choose a thematic fund, you actually limit the framework for his functioning. The other thing is that, normally thematic funds over the long run prove to be disaster. Simply because thematic funds are launched when it is very inopportune. It is, mutual funds are in the business of managing money, but more importantly, their business does well only when they are able to raise money. And when they raise, and it gets very easy if they are able to demonstrate that here is a sector, here is a theme. Mutual funds are also a consumer product. They are also, it has to be sold. It has to be sold as a story. And when somebody tells you, because, this, look at the infrastructure fund, which you are showing on the screen. And when these funds got started, around 2005-06, they did very, very well. And after that, they have done, if you look at the long-term performance of many of these funds for 5 years, 7 years, 10 years, ever since they started, and initially they did exceptionally well. And after that they proved to be a disaster. So after investors have, most investors get attracted or get tempted to invest in those funds when it is generally an inopportune time to invest. And then they lose patience. It is a very disappointing experience. So my general suggestion will be that diversify your investments, choose diversified equity funds, invest in an index fund, invest in a flexi cap fund, multi-cap fund, the value fund, or the tax saving fund. These are the diversified vehicles. Because if you actually limit it by capitalization, limited by theme, limited by sector, you are actually paying full and deriving half a very limited service.
Okay, now comes the tough one, and this is excellent research that our team has pulled out here at NDTV Profit on what has happened to fund values since yesterday. And of course, it was bruising, and this is as of this morning. Of course, market trade is still on, but you had, for example, the ITI large cap fund is down 9%, Bank of India blue chip fund is down 8%, GM large cap fund is down 8%. So the long story short, Dhirendra, a lot of investors would be looking at their portfolios yesterday and feeling a little alarmed. The conventional wisdom will be stay put and do nothing. But that's also not for the, foolhardy.
No, not really. If you look at what has happened to these funds, you look at 1 year return, they are still handsome double-digit return or 25, 26% on most of the mainstream categories. Maybe most investors lost their 2 months of gains. But what happened day before, what happened yesterday, and what is happening today, I think investors will end up with 4, 5%, 10% decline in value, which is not as scary. But at the same time, this is the kind of time when when investors have to really stay the course, and you can stay the course only if you have a plan, only if you understand what you are getting into, only if you are on a methodical if somebody is doing his SIP, somebody might have regret. But if you are in for the long haul, and if you are going to invest more, or there is also reason for you to feel happy about it.
That same question with Arnav. Those looking at their portfolios yesterday and feeling a bit of, flutter, what is your advice to them?
No, my advice is very simple, that if you are a long-term investor, then ideally, I mean, why would you be looking at all the NAVs on a day-to-day basis? It has technically no meaning at all, because it's not like that you have completed your investments and now you're just looking at a withdrawal. If your investments are going on a regular basis, then even if it's a 10% fall over 2 days, ideally you should be a bit happy, because your next installment which is going to come in is going to come in at a cheaper cost, and that is overall over a period of time when this grows, this is going to give you a good compounded return. So as long as you have more investments to make, these kind of falls should actually be welcomed, because it at least ensures that you are not always buying at a higher price which consecutively goes up. And this is the whole idea of a regular investing, that you will have time periods in between when there are falls, so you get more units at a cheaper rate.
All right, time for a very short break, but on the other side, we take your queries and get our experts to answer it. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV.
Welcome back. Now, this is the part of the show where we take your queries. Bharti Gupta writes into us, 56 years of age, and is looking at lump sum returns. She says, I want to invest 60 lakh rupees in mutual funds for the next 3 to 5 years. Please share fund recommendations and an investment strategy. Arnav Pandya still with us to take that query. Arnav, what would be your recommendation for Bharti?
So one is that, looking at her age and the fact that there is a large lump sum available, which has to be invested for a period of 3 to 5 years. The time period which is available is not long enough for you to take a fully equity exposure. And the other part is that the amount is also quite large. So if you are going to spread it out over a period of 2-3 years, by the time that investment period is already over. So the logical thing here in this case would be to go in for a hybrid kind of fund and invest over a period of 5 to 6 months, so that at least there is also some averaging out of the cost. And since the time period is around 3 to 5 years, my choice would be for something like a balanced advantage fund, where the fund manager moves between various asset classes depending on their expectations. So that would be the strategy that you should adopt, and choose around a couple of funds within that category.
Okay. Rahul, age 35, writes in and says he wants to initiate a 10,000 rupee SIP and is aiming for 2 to 3 crore rupee returns. As an aggressive investor, what are the funds you suggest? Now, Rahul's not told us in what timeline he wants 2 to 3 crores, but you know, Arnav, just looking at the math, at 10,000 rupees a month, what is the kind of timeline? And if you are an aggressive investor, so not very risk averse, what is the direction one can take?
No, so I mean, if you have say 10,000 rupees which you are investing every month and you are earning a return of say 12% compounded over a period of time, it will take you around 20 years to accumulate a sum of 1 crore. So in that sense, if he wants a higher amount, the amount of investments will have to be changed accordingly. So if you want 2 crores, you have to invest 20,000. That is the first thing. The second thing is that as an aggressive investor, since if your time horizon is pretty long, you can take an exposure to equity oriented funds. That by itself is a sign of an aggressive investor. So your overall asset allocation mix can have a higher allocation to equities, which moves in tune with your aggressive approach. But within that also, there is still scope to reduce the risk in the sense that do not go in for just small and mid cap funds. You have a choice of a large cap, flexi cap, mid cap, small cap. So if you have 3-4 funds of this kind, then within the equity exposure also, you are able to balance out the risk. Now, the thing is that you might start off with a large or a flexi cap fund, and then as the amount increases, add a mid and small cap going ahead. Because with a very small amount, spreading the amount too thin across too many categories might not be the best way to go about.
Rajaram also writes in, he's age 64 and the goal is guidance, says, I would like to switch my SBI Contra fund and SBI Focus fund to some better performing funds. What funds can you recommend? Arnav, what is your advice for Rajaram?
So, I mean, if I look at SBI Contra fund, it is a fund which takes a contra view on things, the value oriented fund, and the performance has been pretty good here. So, I mean, I do not see the need to chase returns in some other category or some other fund from the SBI Contra one. The SBI Focus one has a focused portfolio, and which is why when the holdings don't do well, you will see a lag in terms of performance. So if the goal is still to remain in a focus category, then the SBI one can be switched to an HDFC focus fund. But if you want to reduce risk itself and go out from the focus category, then you might be wanting to look at a large cap fund, because that is going to be, I mean, one of the stable funds within the equity category over the next quite a few years as the market moves in its way after the new government takes various actions.
Okay. So that's the question coming in from Rajaram, who is asking about where to switch funds. Now, you know, I also wanted to know, and this is a query that came in from one of the viewers, that what is the outlook for hybrid funds? Because hybrid funds which have not been so exciting, do you think that the outlook improves on them, Arnav, considering that you're going to see maybe a shift in the interest rate cycle as well, moving downwards?
So hybrid funds will do better, slightly better, in the sense that those you need to separate the hybrid funds also, because you have the aggressive, conservative, different kinds of one where the debt equity mix is different. Now, in terms of the debt outlook, sooner or later, it is most likely that rates will start going down. When that happens, the earnings from the debt side of the portfolio is going to improve significantly, which will provide a boost for the hybrid funds, especially the ones which are heavy on debt. So the conservative hybrid funds will in that sense start doing better. The only question mark then is that for something like an aggressive hybrid fund where a lot depends on the equity part of the portfolio, if equities also remain steady and they also show some returns, then those funds will also look good. But it could be that if equity doesn't perform for a couple of years, the debt return gets cancelled out by the equity returns, and that could make those aggressive hybrid funds a bit of a laggard in that particular situation.
All right. Thank you so much, Arnav, for all of your time, your advice, and of course the answers to all of our queries that you've given. The key takeaway really is that those who have consistently been investing are the ones who are not worried at all with all of the political upheaval that they're seeing right now, or whatever's been happening in the markets, because slow and steady, at least in as far as mutual fund investments go, actually does win the race. That's all the time we have for today, but stay tuned, a lot more coming up on the other side on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Hello and welcome back to NDTV Profit. You're watching Large Trades, the show where we talk about all kinds of bulk and block deals, large trades and every kind of volume buzzer. I'm your host Mihika Barve and with me is Agam Vakil. But before we go on to the stocks that we do have in focus today, Agam, turnaround in the markets, if you could say so?
Yes, absolutely. There is no doubt about that, and a significant one. I reckon that to a certain extent, now that we have news, a little bit of a higher probability, but in fact, I would say a much, much higher probability of the NDA government forming another, well, rather the NDA forming another government. And that is, in fact, well, giving a lot of confidence to all the participants in the markets at the moment. And that's what you're seeing right now. A 3% advance for the Bank Nifty, 2.7% advance for the Nifty as well. Significant gains across the sector. And in fact, even in the broader markets are actually doing very well today. So something like the mid-cap index is up about 3.6%. Small-cap index also up and about, advancing by around 3%. And most of these indices are moving in tandem with one another. So of course it's a positive. And as you can see on your screen there, in terms of the mid-cap gainers too, we have a whole list of stocks which are actually doing very, very well. Even some of the counters which were actually lagging yesterday have picked up pace by quite a bit and substantially so. So if you just consider, even some of the names in the broader markets, you do have gains of well over 7 to 8%. Of course, in terms of Nifty, you have IndusInd Bank, M&M, Adani Ports, all of them advancing in trade along with something like a Tata Consumer, Hindustan Unilever. It is the FMCG pack which continues to do well, which essentially is also largely, or rather has become the theme of this show, specifically large trades. In the broader markets too, we have something like Jubilant Foodworks, which is doing well. Exide Industries, Amara Raja Batteries, all of them up and about in trade. And it's something, we all need to do, to take stock of. Again, it's, well, of course, the Bank Nifty, which is going to look at the weekly options expiry, is also going from strength to strength. It's up around 3.2%. And that's largely it. The complexion of the markets has certainly changed, and we are seeing gains coming through.
Thank you, Agam, for that. Let's just look at the stocks we do have in focus today, and it's reflecting the theme of the markets, and most of them are FMCG counters. We have something like a Hindustan Foods, VST Tillers, Tractors, Heritage Foods, Mrs. Bector, as well as Radhiko Khaitan and V-Mart that we'll be talking about. But up first, we do have a stock that has been gaining momentum since the start of the day. It's up 19% currently, and that is Heritage Foods, and we have joined by Mahima to give us more perspective on why the stock is buzzing. Mahima?
Correct, Megha. So the stock is buzzing in trade today, as well as it's been buzzing in trade since the last 2 trading sessions as well. Well, this stock is buzzing on the back of Chandrababu winning in Andhra Pradesh. Well, this company was founded by Chandrababu Naidu in 1992. Currently, the stock is the stock did touch an intraday high of 19.4% and volumes around 6 times its 30-day average. Now, Chandrababu Naidu's wife, Bhuvneshwari Nara, holds around 24.4% stake in the company, and his daughter-in-law Brahmini Nara is the executive director of the company. Now, a brief about what Heritage Food does. Well, it's into 2 businesses, namely dairy and renewable energy. In FY24, the operating income showed a growth of around 17%, EBITDA grew 52%, and net profit grew around 84% for Heritage Foods. They also had various new launches, toned and skim milk Tetra Pak, new ice cream variants, new variants in fresh milk, flavored curd, etc. Now, in terms of distribution and expansion, as of Q4, they added 432 milk distributors, 33 VAP distributors, and 11 fresh value-added products. Now, in terms of stock performance, well, in the last 6 months, the stock has gained over 73%. The stock is currently trading 58% higher than the closing price that the stock had 30 days prior to this. And the stock is currently trading at 47 times its earning. So this is the overall view of Heritage Foods and why it's buzzing in trade today.
Okay, Mahima, thank you so much for getting us that update on Heritage Foods. But we move and shift focus to the next stock which is on our radar, and that's Hindustan Foods as well. We have Varsha joining us to tell us more about this one. Varsha.
Well, yes, Adam, thanks for that. So we all know that FMCG stocks are buzzing today, and Hindustan Food is nothing but which offers dedicated and shared manufacturing services to FMCG companies. So basically contract manufacturing to all these FMCG companies, and this is the reason that is also buzzing today. Now, if you see, volumes are up over 10x its 30-day average, while company has seen an intraday high of 10.7% at 532. Now, let's see how was the quarter for the company. So revenue was up 10%, while margins were at 8%. But if you see, FMCG demand in Q4 was sluggish, which actually posted challenges for the growth strategy of this company, and price deflation also impacted business, but diversification into new products have helped this company much. Now, if you see the key highlights for the company, what company is doing into other sectors and what is their guidance for FY25. So they're expecting revenue of around 4,000 crores in FY25, and they're expanding into new product categories to support future growth trajectory. They've approved investment of rupees almost 40 crores in color cosmetic plant. That's the new venture they're entering into, and they've approved also 100 crores investment in sports shoe manufacturing, and they're expecting contribution to revenue and profit from the shoe business, buddy unit, and ice cream project in the upcoming financial year. And if you see, lastly, they're expecting 3x to 4x asset turn for all the company as a whole. So this is all we have on Hindustan Foods as of today.
Yes, thank you so much, Varsha, for giving us those updates. Up next, we have a alcohol company that's in focus, and that's Radhika Khaitan, and it's up in trade today. Volumes were over 3.2x of its 30-day average, an intraday high of 9.34%, and it's gained most of the momentum. It's up 8.8% currently, and the stock is up on the part of the FMCG surge that we're seeing in, playing out in the markets right now. A bit about the company and what's working for the company, though, is premiumization. Now, on average, 45% of its volumes come from the prestige and above category, and 70% of its revenues come from this category as well. And when you talk about their Q4 performance, their volumes were up 14.2% on a year-on-year basis, while FY24 volumes were over 20%. And in terms of revenue growth as well, it was a 16.1% year-on-year uptake to 687 crores in Q4. And they also expect 15% growth from this category itself in FY25. When you talk about the market share and the company's capacity, it has an 8% market share in the Indian alcohol beverage sector, and its capacity is not an issue for its popular brands like Jaisalmer Gin, Royal Ranthambore, and Rampur Indian Single Malt. Is what management says, and they've also stated that Rampur Indian Single Malt is expected to double volumes in the next 3 years. And when you talk about their future plans and outlook, in the end, they're going to expand their luxury portfolio in the travel retail. This is the duty-free channel of the company, and they also aim to maintain mid-teens EBITDA margins by FY26, and they're also going to focus on the export segment and expand their luxury portfolio in this sale revenue place. But that's what we had for Radhika Khaitan. But up next we have Mrs. Bector's that has been buzzing on trade as well. It's up 11.5% right now, and we have Puneet joining us to give us more insight on the same. Puneet?
Well, that's right. It is buzzing on strong, has hit an intraday of roughly 12% and is buzzing on strong volumes, roughly 6.6 times its 30-day average. Now, do know that the company came out with its earnings just in the last week of May, and it showed a strong revenue growth of roughly 17%, which is also aided by strong EBITDA margins. It was up roughly 21% for the quarter, coming in at roughly 58 crores on a revenue of 406 crores, which led to the margins being up by 50 basis points to come in at 14.4%. Net profit also was up 21% to come in at roughly 33 crores for the particular quarter. Now, when you look at the segmental growth, it's been strong across both categories that the company operates in. The biscuits revenue came in at roughly 240 crores, which was up 18%, and so was the growth seen in the bakery segment as well, to come in at roughly 151 crores of revenue for this particular quarter. Few key highlights about the quarter is that the company has gained market share and is now among the top 2 in the premium as well as the mid-premium biscuit segments in quite a few states. One of them being Punjab, Ladakh, as well as Jammu and Kashmir and Himachal Pradesh as well. So they've been expanding presence in the north, as the company has stated. They have also been expanding its presence in Maharashtra and Karnataka, which is the 2 new growth areas for the company, as they highlighted in the conference call as well. On future expansion, the company has mentioned that within the biscuits, they are adding 2 more lines in their current factories, which will be commissioned by FY24 end, and by just a couple of months now in Rajpura. Another couple of lines are expected to be added, and they are estimated to be completed by the first half of financial year of 2025. They are expecting this to come in Dhar, which is in Madhya Pradesh, and expanding the central as well as western portfolio. For the bakery segment, they have commissioned a new bakery unit in Kolkata and are expecting it to commence in the next couple of months. Also starting construction for their plant in Mumbai, which is coming up in Khopoli. So overall, really strong capacity expansion as well as growth plans, as well as product innovation. They've already launched premium products in the baked fit as well as millet cookies. So they are competing with their competitors, and the new capacity will aid growth going forward. Back to you.
Okay, Puneet, thank you so much for joining us and taking us through the latest with Mrs. Bector's. But on that note, we slip into a short break, and on the other side, we get you more large trades. Back in just a bit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When
Welcome back. You're watching Large Trades. We are talking about stocks which are looking at volumes, and the next one on our radar this afternoon is VMart. Let's get in Rucha to tell us more about this one. Rucha.
Thanks, Agam. So VMart is buzzing in trade today. Volumes are at around 7 times of its 30-day average, while the intraday high for the stock was around 15%. Now, this is the highest surge in almost around 11 weeks. Talking about the consolidated numbers, revenues were up around 13%, while EBITDA, the absolute amount of EBITDA, was up 76%, while margins were at 6% versus 4%. Like, this is on a YOY basis. The numbers are on a YOY basis. The loss increased by 2 crores from 37 crore last year to 39 crore this year. Now, talking about store additions, the company has added 21 stores on a net basis in the entire fiscal year 24, while the total store count, including the unlimited acquisition which the company made, has tallied to 444 stores. Now, the company plans to open 40 to 50 stores in the next fiscal year 25. Now, talking about other highlights, revenue was up on account of festive and wedding season-led footfall, while the company is focusing on margins without impacting the top line by increasing synergies and customer acquisition. Management on the call was cautiously optimistic about the demand, and this is after a lot of tough quarters which the company has faced. Talking about the analyst recommendations, according to Bloomberg, there are 12 buy recommendations, a single one sell recommendation, while 5 brokers have a hold recommendation. The return potential from the consensus target price is almost flat at around 0.6%. Back to you.
Thank you so much, Rucha, for giving us those updates. Up next, we have a counter called VST Tiller, and it's up in trade, up about 5% in trade currently. And we have Kanika joining us to give us more insight about the company.
Thanks, Mihika. So VST Tillers Tractors, it's a company which is established by the VST group of companies, and it is India's leading farm equipment manufacturer. Its revenue in Q4 was down 15% year-on-year, EBITDA was down 27%, and net profit was down by almost 13% year-on-year. Now, the stock has been buzzing in trade today with its volumes trading at 4.4 times its 30-day average, an intraday high of 8.1%. Now, talking about its May business updates, the power tillers, their sales degrew by almost 40%. Tractor sales grew by 13.5%, leading to a total degrew in sales by almost 34%. Some key highlights about the company: it recently launched 3 tractor models, VST Zetor, in the 41 to 50 horsepower segment. It also recently entered the US market by establishing a wholly owned subsidiary known as VST Americas Incorporated, and the company has recently partnered with Axis Bank to offer financial solutions to farmers for farm equipment. Here, Axis Bank will offer flexible repayment options, swift sanctions, and special benefits on EMI options to encourage the farmers to opt for adapting farm mechanization. Now, some key guidance that the company has mentioned, it expects to grow in both segments with normal monsoon happening. It expects tractor business to grow by almost 10 to 15% and tiller business to grow by almost 15 to 20%. And finally, the current market share, it stands at 4 to 5%, and the management expects to reach 8 to 10%. Back to you.
Okay, thank you so much for that, Kanika. Of course, VST Tillers is the other interesting one. And from there on, we move on and talk about the Adani Group. Speaking at the sidelines of Adani Group's new co-branded credit card launch, Director Jeet Adani talks about the company's strategy behind Adani One and their foray into financial services. Listen in.
This idea sort of came up when we were looking at what we can do in terms of creating a unique service proposition for our customers, and this was one piece which we hadn't cracked. We were working on all the other stuff around the airport services, around utilities, and that's what the idea was. How do we tie in this piece around finance? This isn't the complete solution, and we also put a caveat to that. We are working on a couple of more things which built into creating a full stack fintech solution, but it's definitely a huge first step. Just being having the ability to give consumers one is credit along with ICICI, but also being able, allowing them to generate points, be a part of our loyalty program, and the early traction that we are seeing in terms of this, during our research and early phases, is that is going to be a very strong pillar for us.
All right. Now, I'll be honest, I use the Adani One app myself, but I just wanted to get a sense from you, this product, this super app, so to say, what is the vision behind this entire thing? Because you're not, Adani Group itself is not really known that much for consumer-facing businesses apart from your food business. Can you tell us a little bit of how this works out?
Absolutely. I think it's all about narrative. We are a very large consumer-facing business. It's just we don't, it's never been seen that way. With airports alone, we did 85 million footfalls this year. And, with Navi Mumbai coming in and the portfolio growing and the organic growth that's happening with the country, we see that this footfall itself will grow to 200 million a year, which makes it a very sizable business. We have about 30-40 million people on the utility side between gas and electricity, which are, again, not traditionally seen as B2C businesses, but you have a direct touch to the consumer. The consumer is accessing your infrastructure, going through your infrastructure on a daily basis. And that's sort of what we're trying to work towards, that, we've created the infrastructure and the services to give to our consumers, but, how do we make sure that the friction, the convenience, all of those aspects are also made easy using Adani One as a platform. And when you do that, you can create a lot of other things. That's what makes a super app, that it's not just one service. Yes, you have an anchor service, but it's all the other solutions that add on to that. And that's what all the successful super apps in the world have done, and that's something we want to do.
Fair enough. Just talking about the current state of digitization within Adani Group, I wanted to get a sense from you, how major is it for you as a young startup? Adani One, I could call one a startup itself. But to your mind, how important is digitization for a group like Adani Group?
So I would put digitization in two columns. One is digitization as a business. And the second thing is digitization as an enabler of business. And in our case, both of those things are really important. Digitization as a business, what we're seeing with Adani One, well, we have a long way to go, but the traction that we're seeing, the sort of user feedback has been quite positive. And that's what, and this business will grow. It might not generate as much cash as some of the traditional industries, but it's highly valuable because you have with you a deep trust of the consumer, and you keep having consumers coming again and again to interact with you. On the other part, and when you look at digitization as a way to enable businesses, I think it's a more existential issue. If you don't do that, then we're not going to exist soon. And that's how important digitization is in today's world. Everything to do with efficiencies and cost, how we look at solving new challenges in a different way, and really using the new technologies as an enabler to do things smartly.
Before we go to what we have next, I just want to address what's been flashing on your screen right now. And we've just gotten a new update where the Prime Minister Shri Narendra Modi has met the President today and rendered his resignation along with the Council of Ministers. The President has accepted the resignation and requested Shri Narendra Modi and the Council of Ministers to continue till the new government assumes office. And this is via the press communique. But moving on, we have an excerpt of a chat my colleague Alex had with Mirai Asset's Swaroop Mohatni and Edelweiss's AMC Trideep Bhattacharya, talking about how Indian investors affirm their faith in long-term investments. Now, the ACE investors say we actually witnessed inflows across funds in yesterday's sell-offs. Do listen in.
It was as per predicted. I mean, we've been seeing this reaction for a long time, and the faith of the Indian investors on long-term equity investments were reaffirmed yesterday. Day before, of course, there were a lot of questions, rightfully so. But yesterday we saw inflows across funds. I mean, both active, passive factors to our market cap ETFs to our active funds. We saw inflows across. It's a good thing to see, that investors are changing their stand in the market and looking at opportunities to deploy, which was such a refreshing day yesterday. We went back happy, actually.
Okay, Trideep, did you see, what was your experience? Because it's counterintuitive, one would say, in a market that saw the benchmarks fall 6%, the broader markets lose ground as well. Swaroop saying his fund house saw inflows.
So actually, I would agree with that. I mean, we also saw inflows across strategies and across so-called segments of equities. And I would sort of put the context as that heading into elections, there was a bit of a volatility in terms of the vote count. Of course, the exit polls caused one-way outcome, but if you go to basically days before that or a month before that, we saw a bit of volatility in and around the market. So I think markets went into it a little light. FIIs were obviously massively short, but on the other side, the positions were reasonably balanced. We saw volatility coming about. But I think there were the shaky hands had a bit of a time to sort of do so before. So hence yesterday, when the markets crashed quite a bit, we actually did see inflows. The final thing that I would say on this is net. Yesterday's closing Nifty levels is same as what we saw in early May. So barring the the exit poll drama and the subsequent reality, we are not far off in terms of market levels.
Equilibrium is sought and found often in these cases, but it's heartening to see two large fund houses tell me that they saw inflows on a day where you saw such frenetic selling, and that to me indicates that the mutual fund investor by and large is learning to be more pragmatic and focused on the long term. From the fund manager's standpoint, and from wearing the hat of a fund manager, Trideep, I'll come to you on this one. How do you navigate this and how are you approaching this? Because yesterday would have presented several opportunities with stocks falling, 20-25% in certain cases. Is that a buying opportunity, or do you wait for the dust to settle just a bit?
So I think the practical answer is a mix of both. What we do is we never buy full in one go, and at the same time we don't want to leave too much for the later. But I think I see objectively this event as an excuse for correction in valuations of those companies where the valuation multiples had really kind of shot up, given they were in trend, so to speak. And if you take that valuation correction away, I would say net between a month ago and now, most likely 99%, we have a same government. We will probably see the key ministries remaining the same, and hence maybe we have a coalition government, and hence maybe to a certain extent there might have to be a little tweaking in the policies. But little tweaking in the policies is very different from policy reversal, which the market seemed to be worried about yesterday. So from a medium-term standpoint, the earnings potential don't really change. It is just that what valuations in some of the in-trend areas, they have taken a haircut of about 20-25%, which in the grand scheme of things is quite healthy, is the way I would think about it.
Well, that was the investors for you. But before we let you go, let's just have a quick market check. We have the Nifty 50 up almost 3% after the terrible market pressure that we did see yesterday. It's now the top gainers on the Nifty 50. We have an IndusInd Bank up 7.5%, as well as auto companies like M&M and Hero MotoCorps, both up about 5 and 6% respectively, as well as Shriram Finance and Adani Ports that have gained more than 5%. We have only two counters on the Nifty 50 that are currently in the red, and that is BPCL and L&T, and that's also negative bias, but not more than 1% on each of the counters. When we look at the broader markets, it's the Nifty Midcap 150, which is clear outperformer today, up 3.5% in today's trade. When we talk about the companies that are gaining, we have Aditya Birla Fashion Retail, that's up about almost 14%. Vodafone has seen a turnaround, up 13.2%, as well as Emami on the back of the FMCG surge today, up 11.5% in trade, as well as an Endurance and Sale. The counters that are not doing so well, we do have a Bharat Dynamics that is lower 10%. Well,
सरकार हे तयार होत आहे. महाराष्ट्रामध्ये आम्हाला अपेक्षित यश मिळालेलं नाही. किंबहुना आमच्या अपेक्षेपेक्षा खूप कमी जागा या महाराष्ट्रामध्ये आम्हाला मिळालेल्या आहेत. महाराष्ट्रात खरं म्हणजे आमची लढाई ही जशी महाविकास आघाडीच्या 3 पक्षांची होती, तशी काही प्रमाणात नरेटिव्हची लढाई ही देखील आम्हाला मोठ्या प्रमाणात करावी लागली, ज्याच्यामध्ये संविधान बदलणार असा जो एक नरेटिव्ह तयार करण्यात आला होता, तो नरेटिव्ह निश्चितपणे ज्या प्रमाणात थांबवता यायला पाहिजे होता, त्या प्रमाणात आम्ही थांबवू शकलो नाही, हे देखील खरं आहे. जनतेने जो जनादेश दिलेला आहे, तो शिरसाबंद मानून या ठिकाणी पुढची तयारी करण्याचा आम्ही निर्णय घेतलेला आहे. त्यामुळे ज्यांना जास्त जागा मिळाल्या त्यांचे मी अभिनंदन करतो, पण त्याच वेळी काही गोष्टी या आपल्या पुढे निश्चितपणे मांडल्या गेल्या पाहिजेत असं माझं मत आहे. कारण इलेक्शनमध्ये एक इलेक्शनचं अर्थमॅटिक असतं. या अर्थमॅटिकमध्ये कुठेतरी आम्ही पराजित झालो असं माझं मत आहे. अर्थात याच्या बऱ्याच मीमांसा असू शकतात, त्या पुढे आम्ही करू. पण आपण जर बघितलं तर एकूण महाराष्ट्रामध्ये महाविकास आघाडीला ज्यांना जवळपास 30 जागा मिळाल्या, त्यांना मिळालेलं मतदान आहे 43.91% आणि आम्हाला मिळालेलं मतदान आहे 43.60%. म्हणजे अर्धा टक्क्यापेक्षा देखील कमी फरकाने त्या ठिकाणी आम्ही नंबर जो आपल्याला पाहायला मिळतोय तो 17 आणि 30 आहे. दुसरं आपण जर मतांमध्ये बघितलं तर महाविकास आघाडीला 2,50,00,000 मतं मिळाले आणि महायुतीला 2,48,00,000 मतं मिळाले. म्हणजे प्रिसाइसली सांगायचं झालं तर 2,00,000 मतं आमच्यापेक्षा फक्त त्यांना जास्त मिळाले आहे. 2,03,192 मतं. दुसरं याच्यामध्ये आपण जर मुंबईचा विचार केला तर मुंबईमध्ये जरूर महाविकास आघाडीला 4 जागा आणि आम्हाला 2 जागा मिळाल्या आहेत. पण महाविकास आघाडीला मुंबईत 24,62,000 मतं आहेत आणि महायुतीला 26,67,000.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Welcome to India Market Close, and what a turnaround from what happened in trade yesterday. Just look at the markets today, and we are back to the levels that we ended on Friday. I think all of the losses of Tuesday have been erased by the gains done on Monday and today. So 3% higher, nearly at the high point of the day. I don't think too many people would be complaining about this particularly. Bulls or bears, everybody's gotten the chance if you are swift enough. Banks are participating, large cap, mid cap, small cap, everything is participating. 2,082 points for the Nifty bank, and the mid cap and the small caps too are participating. Let's get the heat map up on the screen. There will be very few losers because Hindalco, which was in the green, has also turned in the red. I doubt, okay, yeah, maybe an odd BPCL, which is surprised with crude prices done what they've done, and LNT a little bit, but otherwise almost everything in the green. Just look at the gains that have come into financials. Look at the gains that have come into almost agrarian themes. I mean, M&M being up 6% aside of the company specific reasons also probably got to do with this whole feeling that everything related to agrarian and rural will probably do well. So no surprise that that stock is doing what it is doing, but autos by and large are doing well. Adani Ports, yesterday's key loser, is up about 5% as well, and Hindalco is the surprise. Just before I hand it over to Tamanna, just shows the ferocity of the up move today. Let's get the Hindalco intraday chart. It started off 5% lower on the news that the Novelis IPO has been postponed, and it's now up 5%. Just look at the kind of move that you've seen in a metal stock, not policy linked, but just the sentiment turn in the session today. Tamanna, brilliant afternoon for the bulls.
Yeah, and there are a couple of reasons that have triggered that. One is Mr. Chandrababu Naidu coming and reaffirming his participation in the NDA unequivocally. He's arrived in Delhi, and we'll get that picture up for you just a few minutes ago. Prime Minister Modi has officially staked his claim to form the next government with President Draupadi Murmu. So those concerns now getting completely wiped out. Now it's all about what that government looks like, you know, the bits and pieces, who gets what ministry, etc. So that's one of the big reasons you're seeing this gain. Fortune favors the brave. We said this yesterday. Those who had the jigger yesterday to stick their necks out.
Are 1,000 points in the green on the Nifty?
1,000 points in the green. You know, this is just insane across the broader markets as well. Actually, we'll pull up the India VIX first, because that's a very good representation of what's happening. And India VIX down 28%. Remember, at its peak, this was up 40% yesterday. So India VIX at 19. I mean, the volatility index has lived up to its name, gyrations from 30 to 19 today. So this is telling you the story. On the broader markets, the mid-cap and small-cap indices also part of the party. I mean, why not? 4% up on the mid-cap 100. The small-cap index also 3% up. I'm going to pull up sectors, the sectoral indices, because like Neeraj said, pretty much everything is up in the green. So it's all about relatively what's doing better. Metals, they're right on top. There's just nothing in the red today. Everything, it's a sea of green out there. Nearly 4.5%. Banks, auto, consumption, FMCG, everyone's a winner. I know we've been talking about results today in the markets. Everyone's a winner. Some key notables perhaps among the metals: Nalco, SAIL, Hindustan Copper, Hindustan Zinc. Some of these have been doing very, very well. Look at the gains there, 10% in that region, 8% up on SAIL as well, Hindustan Copper, Hindustan Zinc. I would point out Vodafone and Indus as well. Actually, that entire group stocks are doing okay today. Vodafone and Indus have completely joined the party. Vodafone 12% up at 1485. I mean, you're still a far away from its lifetime highs, etc. But the point about wiping out most of the losses of yesterday, it's a quick turnaround and a quick recovery. Indus also up 8%. So yes, those who had fortitude and the stomach for this volatility are laughing their way this afternoon. The FMCG boom continues. Emami, Dabur, Marico, Colgate, HUL, just few of those. Emami is an astonishing story. They also had the numbers to back it up. Remember, even before all of this, Emami's quarterly numbers is something that the street was quite happy with. That's about 11% up. What's on the downside? Defense is still weak, and one could argue that high valuations come at a cost after a point. So that froth was there, and a Bharat Dynamics in a Cochin shipyard, for example, are not really participating today. Bharat Dynamics nearly 9% down. Cochin shipyard also not looking great. But it's all about politics right now. Let me go across and play out for you what Eknath Shinde, the Chief Minister of Maharashtra, is saying.
आज इंडिया अलायन्सची बैठक आहे. आता म्हणतात ना, गिरे तो भी टांग ऊपर, अशातला प्रकार आहे. कारण त्यांनी अगोदर देखील म्हटलं होतं की एक मोदी द्वेषाने पछाडलेले लोक, मोदी हटाव, मोदी हटाव, मोदी हटाव, मोदी हराव, मोदी हराव. बघा, दुसरा काय अजेंडा त्यांच्याकडे नव्हता, पण मोदीजींकडे विकासाचा अजेंडा होता. आणि काही लोक म्हणाले आता मोदीजींना तडीपार करा, तडीपार करा. तर या देशातल्या जनतेने बोलणाऱ्यांना, इंडिया अलायन्सवाल्यांना सत्तेपासून रोखून त्यांनाच तडीपार केलेला आहे. त्यामुळे मोदीजींच्या विकासाला लोकांनी मतदान केलं आणि एनडीएचं मेजॉरिटी झालेली आहे. त्यामुळे मेजॉरिटी झालेली असताना तुम्ही सरकारची स्वप्न.
Well, I think political voices will keep on coming. It's important to dissect what to do in a scenario like this. Hemen Kapadia of KR Choksi, Stocks and Securities, joins us right now on the show. Hemen, good afternoon. We are going to try and play a bit of a rapid fire, Hemen, because we want as many answers from you as possible because it's a packed show. So I'm going to start off with asking you if you would take a fresh trade on the index at these levels, either the Nifty or the Nifty Bank.
Neeraj, I know you for 15 years now. I consider you to be respect you and as a friend. And the first question you asked me is a bouncer straight off.
But it's not a bouncer. It's the most expected bouncer. You anticipated this bowler, a burly, tall West Indian bowler, to bowl a bouncer at you. Now deal with it.
Okay, I'm wearing a helmet, but yeah. So, frankly saying, I'd wait just a wee bit. But if I were to take a position with a gun at my head, on the spot market, 22,450 would be my stop loss because the bounce is underway. The VIX is down, but the VIX won't go to sub 15 till the swearing in ceremony comes in. So from 31.5 to yesterday to 25.5 closing, VIX is sub 20. And in the last two times, whenever the election results have been declared, that week, the VIX comes and closes somewhere near 15, 16. So I believe that we are on the recovery path. A bit late in the day, but I prefer to be more stock specific. But yeah, once again, 22,450 would be my stop loss for a trade on the Nifty.
Okay, so that's on the index. And Himen, a clutch of stocks flying around, so it might be easy or difficult to choose. What do you bet on? What do you bet on?
Okay, there are two stocks which I like. One Neeraj is Bsoft. Simply because IT is oversold, downside limited. Bsoft hasn't broken the bottom and the market has gone completely haywire. So there is little bit of resilience, positive divergence. The oscillators on the daily chart are all buy without getting too technical. So Bsoft is something that looked interesting in a buy at 630, stop loss of 605, target 680. The second one is UPL. UPL has been in a base formation for quite some time, Neeraj. And this quite some time, I mean, this is the fourth month, 4.5 months and counting. We've made progressively higher tops and bottoms, indicators are positive, and we are on the cusp of a breakout of a 530. So buy on UPL at 525, stop loss 505, target 565, and anything else on the IT space warrants a punt from a 2-week point of view, a 3-week point of view, Neeraj.
Himen, hi, good afternoon. Tamanna here. You know, all right, you've done the picks, you've done the levels. What about the strategy going into the rest of the week? Because all right, even if I balance out a terrible Tuesday against a wow Wednesday, now what to do on Thursday and Friday?
Well, hello Tamanna. I'd say once again, if we can just leave the indices out of the equation. There are a lot of stocks which are flying around, and many of them are looking interesting. You have cement looking interesting. You have banks doing well. IT has been okay. FMCG is run its course, not run its course, but it's had a big move. So in the entire IT pack, even if you pick or choose something individually, Tamanna, it makes sense. Or if you want to go for a high beta move, anything, even something like an Axis Bank or on the Bank Nifty is going to help propel the markets higher. As of now, the bounce is on, and it was mayhem. But as of now, all the hourly mechanical indicators have just given a crossover buy. So I believe for the next couple of days, not with the same intensity, markets should be better. 5,000 point range on the Nifty, 2,000 point range on the Nifty, 5,000 point range on the Bank Nifty. Yesterday's lows are a temporary bottom, the way I see it.
All right. Yeah, Himen, in terms of some of the FMCG counters which are completely, going berserk for the last couple of days. In fact, for them, the last 2 days have just been fantastic. Anything you like particularly? Imami, Dabur, any view over there?
Imami, a bit late in the day. Dabur, Lever, all of them. I think Dabur is relatively, I would say, cheap. Why? Colgate all-time high. Imami at the 5-year high. Lever, I believe, is almost at all-time high. And so Dabur is relatively technically cheap. The monthly breakout comes in about 610. So I'd go for Dabur.
All right, so right on cue, we have Mahima with us talking about what is happening with the FMCG sector and the reason that you're seeing that kind of an excitement. Mahima, a lot of brokerages also reckon that the next government will focus on rural spends, and that will in turn help the FMCG sector.
Right, Tamanna. So since the past 2 trading sessions, we did see a surge in the FMCG stocks, and this is because markets are now turning to a defensive play. I'll start with the top movers in the last 2 trading sessions. Where Radico Khaitan moved the most with 8.5%, then Godrej Consumers with 7.8%, Marico with 6.8%, and then United Spirits and Tata Consumer Products. Now, key factors which are leading to this positive outlook, well, a couple of things. Political climate. The current government's status may lead to increased focus on pro-consumption initiatives. Also, rural revival is something that is on the cards of a lot of FMCG's company. We are seeing green shoots in the rural demand. Also, we are seeing a turnaround in terms of demand, and a favorable monsoon will also lead to demand surge. Then, in terms of welfare reforms, where a renewed attention to welfare reforms is expected, and this will uplift the lower income segments, which will eventually translate into a higher consumption, which is why these FMCG stocks are buzzing. Now, in terms of of rural green shoots, well, couple of reasons why the rural demand is recovering: uptick in farm income, declining food inflation, and expanding distribution footprint. Now, in terms of what the brokerages are saying about these FMCG stocks, I'll start with MK on consumption stock. Well, what they're saying is they're upgraded HUL to buy, Nestle India to add, and ITC they've downgraded to add from buy, considering the current market conditions. And they now prefer stocks like HUL, Dabur India, Bikaji and Honasa. Then we have Prabhudas Leeladhar on FMCG stock. They're saying that favorable monsoon forecast and future RBI rate revision will drive the consumption sector overall. Their top picks are HUL, Britannia, Godrej, Marico, Dabur, Imami and Varun Beverages. Lastly, in terms of revenue and margins, outlook in terms of FY24, revenue is expected to have a double-digit growth, with Tata Consumer witnessing an 18% growth in terms of revenue. In terms of stocks like HUL, ITC, Marico, Dabur, Nestle will have a growth between 8 to 11%. But in terms of margins, there is no expectation, there is no kind of margin expansion on cards as per the Bloomberg estimates. Hardly a 1% expansion may be seen in some companies. In terms of valuations, well, high valuations with marginal dips will take place. Currently, these are the top 5 companies as per market cap and their valuations, and we are seeing that the valuations will not change in FY24 to a lot of extent. And lastly, in terms of analyst recommendations, well, a lot of analysts are still bullish on the FMCG sector, where ITC, Dabur, Marico all have a lot of buy calls and a lot of hold calls as well. So this is the overall view on FMCG sector and why it's buzzing in trade in the past 2 sessions.
Right, thanks for that. Thanks for that. And that's a great sense of what you should be watching out for. Remember, we'll talk more about this tomorrow as well with our guests about whether FMCG now still deserves a mention in your portfolios after the run-up that we've seen. But the big news, of course, is is the development around politics, Tamanna.
Yeah, and I will just show you that still picture. So the Prime Minister has officially resigned, because that's the process to form the next government. He has to resign as the Prime Minister because this term of the Lok Sabha ends, and then he has visited upon President Murmu, Draupadi Murmu, and formally staked claim to form the next government. Now, the reason that Prime Minister Modi can do that is because his party, the BJP, is the single largest party after the elections, and Draupadi Murmu would have called upon him to form the next government. In fact, Maria Shakil has this report for us.
Yes, that's right. I think because people close to Chandrababu Naidu, and as you know, Vasudha and Veera have been indicating, Gargi, have been tight-lipped. Mr. Naidu is a very, very wily politician, just as Nitish Kumar is. They are quintessential, war horses of Indian politics. So they have seen the ups and downs, they have seen governments, they have seen transitions, they have been in power, out of power, so they understand how crucial it is to stay tight-lipped, particularly at this crucial juncture. That is the reason why Chandrababu Naidu hasn't said much, except for the press conference that he did. So has Nitish Kumar, not said a word except for Abhinandan or Naman Karta Hoon in the flight, while Tejasvi Yadav, his former Deputy Chief Minister, was seated next to him. So I would say that there has been no talks whatsoever till now between Mr. Naidu and Prime Minister Modi, between Mr. Naidu and anybody in the government, between Mr. Nitish Kumar or anybody in the BJP.
All right, so that was Maria Shakil reporting from outside the Prime Minister's residence on what is next. And now, interestingly, Neeraj, because this is what the street is watching, right? Sources to NDTV network saying that Home Minister Amit Shah will be a minister again in the new government. Rajnath Singh, Nitin Gadkari, S. Jaishankar, Piyush Goyal, Gajendra Singh Shekhawat, Bhupendra Yadav and Smriti Irani, despite her losing her seat from Amethi, are some of the names being pipped to be ministers again. There are some notable exceptions or omissions from this list of the ministers in the previous regime, the finance minister being one of them. So that's what people are going to watch. Yeah. Who's the next finance minister? We also spoke earlier today about how TDP, Chandrababu Naidu's party, is asking for 1 ministerial berth for every 3 MPs. So 5 to 6 go to him. Eknath Shinde with 7 MPs might get 2 ministerial berths. If that formula is accepted, negotiations are on, and you might have this another 4 or 5 for Nitish Kumar. So that's one thing to look at. Another update for the market to watch out for, it is likely that Prime Minister Modi could have his oath-taking ceremony this Saturday itself. So if you were hoping for, one weekend of no action, that's not going to happen.
But maybe this is action that people might like, actually.
Oh, no, this is very important.
From a market's perspective, it's a big respite.
It's a big respite because you now know that the government is being formed. Those letters of support is what I would say, if you want, if you're really picky about sealing the deal,
this is done.
You would wait for letters of support which need to be sent to the president by the alliance partners, saying that yes, we support this government. So yeah, that's the long and short of it.
Yeah, I know, and this is the longest, this is the shortest long and short of it, to be very honest, simply because it's so important a topic. Let's talk about that with Jitendra Gohil, Chief Investment Strategist at Alternate Asset Managers Johnson as well. Jitendra, it's been a while. Thanks so much for taking the time out. How do you approach this development, Jitendra? The market has erased all of the gains or losses over the last 3 days. We are back to Friday closing, pre-exit poll closing. At the current valuations, with the current composition of a coalition government, what's your stance on India?
Hey, hi, and thank you for inviting me on your show. It's been a long time. Yes, I think, see, from country perspective, from financial market perspective, from economy perspective, I don't see any major change that has happened, right? So Prime Minister Modi is going to be there, NDA is going to form the government. And if, let's say, this verdict was there on 2019 election, we would have cherished, right? And this time around, the expectation was so high that the outcome was little weakish, and then market, started to have all these probabilities. But now the confirmation is coming in. We are going to see stable government at the center. This is what market wants, and this is what they are getting. From economy perspective and from stock market perspective, what we are, going to communicate, and we have been communicating, is that look, one leg, the investment-led growth that has been there, and it also had some kind of multiplier effect, and hence the GDP growth was lopsided, right? So while the growth was growing at around 8% odd, we have seen that is largely led by investment-led growth. The other leg, which is consumption, which is still more than 60% of our GDP, has been a little bit weakish. But last few months or so, the monsoon, expectation is now better than last year, and also the rural consumption has started picking up. So this rotation was inevitable in our view, and hence we think that the market will remain a little bit resilient, probably another 3-5% correction possible. But in our view, the trajectory, the growth trajectory for India, earnings remains intact. Only the valuation part will see some kind of cuts in certain pockets which were frothy. So some rotation, but overall we remain constructive on equity so far.
Okay. Jitendra, do you guys, I don't know what the mandate of the funds or the schemes that you manage is, but do you guys look at it thematically or sectorally, and is that changing now, or it's still present, continuous, if you will?
So it is little early to say, Niraj, but what we look at, yes, you are right. There could be, some rotation that we are expecting, because the leg that we have been playing so far on domestic capex related sectors, cyclical sectors, that has actually run up so far, and the narrative for the market is going to change towards slightly a defensive play. We are already bullish on pharma companies, which we remain bullish. However, we think that after this verdict, and also because the fundamental shift is happening, like consumption is picking up on the ground, monsoon is going to be better. So we might want to rotate portfolios. So, for example, the sectors that we continue to like, and we will maintain our positive view, will be real estate. We think that real estate companies, if on corrections, they offer very good buying opportunity. We are also of the opinion that in the second half, the RBI might ease their policies. Starting with, let's say, internationally, ECB might want to start cutting rates. US eventually will have to cut rates. So net, I think in the second half, the monetary condition is going to ease, and hence real estate kind of sectors that we like. Also, some sectors which are linked to real estates, we started buying, and we have been holding very positive views there. The rotation that we can think of is rural-focused NBFCs, which have been a little bit languishing. So we think that rural-focused NBFCs, which funds mostly the auto and ancillary. I think those kind of NBFCs we would love to buy at this point of time. Second, we have been very positive on PSU banks. We have started booking profits, and after this verdict, I think the devaluation, there could be some, probability of derating of some of the PSU banks, and hence we think that the private banks, which have remained on the sidelines, over the past few, even years, some of the banks have been underperforming significantly. I think private banks, rural-focused NBFCs, and then the real estate and allied sectors. I think these are the sweet spot, apart from pharma that we already have a positive.
Jitendra, hi, Tamanna here. Just wanted to take that forward when you're talking about the focus on consumption. Do you see a further push on the premiumization trend when it comes to consumption? Because that's been the big theme. And just your view on autos, because before all of this tumultuous last couple of days, the auto numbers got buried in all of this, but they weren't quite bad. And autos has been on an interesting trajectory.
Yeah, Tamanna. So, a few things in terms of consumption. FMCG, if I look at, they have already done so well over the past few sessions or so. So I think most part of the rally is captured. And remember, FMCG is like a 15% max, CAGR story, because they are not cheap. And this is completely a flow-driven rotational kind of a play. But within the consumption, you are right, the premium consumption. So we like hotel stocks. We think that some of the hotels which have fallen 15, 20%, even higher from their peak, I think it's a very good buying opportunity. We think travel, tourism is a multi-year opportunity, and hence some of the hotel companies that have fallen off the cliff, I think those are the better ones to get at this point of time. Second, we also like airline companies. I think fantastic outlook in terms of number of airports and the kind of premiumization that you talked about. I think in that theme, we definitely like airline companies as a whole. So within consumption, we'll pick pockets. In that auto, within auto, we like auto ancillaries.
Right.
Why? Because we think that the OEMs are going to go, heavily in terms of expanding capacities.
Right.
OEMs are better positioned, but I think it is better to go for auto ancillaries where, I think margins will remain capped, but in terms of growth opportunities, because EVs, new hybrid kind of vehicles, content per car, export opportunities. So I think
and I suppose Jitendra,
continue.
the EV play as well. So Jitendra Goel there with a whole host of ideas that we're looking at. Thank you so much for speaking with us today. It's been absolutely great hearing your views. Very quick break, but just taking that consumption story forward. We have a very special guest on the other side. PVR Inox's Ajay Bijli speaks to us exclusively after this very short break. Stay tuned for all that and more.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day.
We're speaking with PVR Inox this afternoon, and Ajay Bijli, the Managing Director, is joining us now live. In fact, from the iconic Lido Theatre in Mumbai's suburban areas in Juhu, which PVR Inox is modernizing. Mr. Bijli, thank you for speaking with us here on NDTV Profit. Great to have you on. Let's begin.
Thank you for having me.
Absolutely.
Thank you.
Let's begin with what we're doing, what we're seeing right now behind you. Tell us about the plans with Lido and what the appeal or the USP is.
Well, it's a very iconic cinema which has been around since 1950s, and we got the opportunity by the current owner of the cinema to convert this into a threeplex. So it's a very a modern threeplex, but we've still tried to make the design in very Art Deco manner. The legroom seat width is somewhere between a recliner and normal seats. Is 1500 millimeter and 750 millimeter in width, so which is almost like a business class sort of a seating configuration. 326 odd seats. And it's a 125th screen in Mumbai. Very excited about it. And to revive an old cinema and carve it out into a modern day multiplex is something which is very exciting in a great location like Juhu, which is the hub of Hindi film industry. And Bombay itself is the capital of Hindi film industry. So it's quite exciting to open the cinema here.
Just trying to understand with Mr. Bijli, because I've been seeing a lot of new launches being announced by PVR Inox in the past few months, and all at iconic locations. What is the kind of revenue contribution these come into? Where does this fit into your entire strategic plan?
Well, we've opened about 45 odd screens this financial year, and which is we are hardly into 2 months now. And so cherry picking our locations very carefully. It can be a standalone cinema like this one, which is converted into a threeplex, or it can be part of a mall. We opened I think a 14-screen complex recently in Bangalore as well with Phoenix Mills. So I mean, these are all value accretive. We're very cherry picking all our locations, cherry picking the demographics where movie consumption is high. So specifically, how much this is going to contribute is maybe 12 to 15 crores revenue a year. But every property that we pick up is at a unit level economics. It's at about a 4-year payback, and we look for about 25% EBITDA margin. So that's our going in capex, and our opex is fixed like that. So that's the intention. Doesn't matter where we open the cinema, whether it's a premium cinema or it's a mass cinema or it's a luxury cinema. Our economics remain the same. Roughly, this cost us about 4 crores a screen, because a standalone cinema, so a lot of infrastructure we had to pay for as well. Normally, when you're in a shopping center, the infrastructure comes along with the shopping mall, which the developer contributes towards. But this was slightly higher than about 1 crore per screen higher. But the number of seats are very less. It's only 326. But this is the kind of revenues this will generate.
Mr. Bijli, in terms of your outlook, since we're getting the opportunity to speak with you, and like you said, just 2 months into the new financial year, I wanted to know your outlook on how FY25 is panning out for you. We saw your FY24 numbers. You've spoken about improving margins in your conference call as well. How do you aim to do this? Will you see higher ticket prices, driving footfalls? What's the plan here?
Well, first 2 months, I must confess, got impacted by, the elections as well, because we're a very long period of elections, and therefore a lot of movies did not get released. But from June onwards, there's a huge pipeline which had got bunched up, which is coming up now. We've got a movie called Chandu Champion, which is coming shortly. We have a very big movie, Pushpa 2, which is very big. So big film, Kalki is coming end of June as well. Sorry, I forgot about that. Prabhas is very big movie. So I think now June onwards, I think it's looking very good, the lineup. In terms of, the merger itself has brought in so many synergies in terms of cost optimization, whether it's COGS, which is cost of goods sold of our F&B products, whether it is manpower, whether it's electricity. Also the revenue side, 2/3 of the synergy that we spoke about of 250 odd crores was to come from F&B, ticket pricing, and also optimizing footfalls. We've come out with a passport of 349 rupees, where 4 movies can be watched in 1 month, and 99 rupees offer of unlimited popcorn and Pepsi. So all these things are optimizing our footfalls that we want in our cinemas, and cost optimization is just by virtue of the economies of scale we're getting with such large merger that we've been able to do 12 months ago.
I was just taking on from that. You said elections has been tough, but I know you have tied up with Star Sports to screen the World Cup. There were some movie, cinema halls that had offered election viewing as well. Just trying to understand this alternate model to get more footfalls in. Are you going to build upon it?
Look. Well, India is a very robust movie market. 1,700 films get released in our system, which is massive, which is very large, and about 900 million tickets get sold in India. So I think our mainstay will always be movies, and the way we are spread out, our 1,700 screens is in every region. But however, at the same time, we're also a venue which has got seats, has got air conditioning, has got big screens. So we're also thinking of what if we do some alternate content. We showed Taylor Swift's Eras Tour last month, BTS a few months ago, then cricket matches, World Cup, stand-up comedies. So we were thinking, why not? Why not use the venue as well for other purposes and make them, repurpose them rather than just having it for the cinema. So not much revenue, but still about, I think 1%, 1.5% to 2%, revenue still come from these alternate programming. But I think mainstay will always remain movies. At the same time, we are repurposing some of our cinemas, the newer ones which are coming up, to facilitate gaming, to facilitate live theater. So for that, the infrastructure has to be modified a little bit, but we don't mind doing that, because I think, as I said, the venues are great, the seating, hospitality, food, the locations are fantastic. So why not use them for other purposes as well? And World Cup is only 20 overs. So T20 format is something we found it to be quite successful in cinemas. When the format becomes longer, I think people get restless. So I think a football game or a T20 match is still something that can be shown.
Is it sort of also a requirement, because more and more people are getting used to watching content and waiting for movies on OTT? I have to get your view, Mr. Bijli, on the whole OTT versus cinemas debate, which has been going on since a few years. Some would argue that having all of these alternative views of revenues is testament to the fact that you need a plan B, or you need to buffer up the core business.
I don't think so at all. As I said, I looked at myself as a venue, and with 1,700 movies coming in India, I don't have to look at a plan B, to be honest with you. And this whole debate about OTT versus is more about coexistence. I think it's, I've given these examples, even I'm slightly feel jaded of giving these examples. It's like having a kitchen at home, or Zomato delivering you food at home, and then going out to a QSR or a restaurant. I think people are not straitjacketed. They don't want to do the same thing every single day. That's why we still sold 900 million tickets. When I say we, means the industry, cinema industry, 900 million tickets of the first year of opening after COVID. And second year again, we sold 900 million tickets. PVR itself sold 150 million tickets in the first year, 150 million tickets on the second year. That only goes to show that people are going out. Yes, India is a very disparate market. Some consumers still want to be at home, but what they're watching is TV shows. TV shows people are watching at home, but when it comes to movies, which they want to see, the FOMO factor is still back. There's an 8-week window between theatrical and a movie coming on any streaming platform. So that 8 weeks is a hell of a lot if people want to watch the movie, and the peer group has seen it, their friends have seen it, their family has seen it. Movies like 12th Fail, Lapata Ladies, Crew, Shrikant. People are coming to the cinemas and watching it. They're not watching it at home. Lapata, of course, 8 weeks have lapsed. That's why they're watching it at home. Prior to that, it was playing at the box office.
All right.
So people do both. It's it's not an either or.
Yeah.
People do both, basically.
Yeah. You need somewhere to go out as well. Thank you so much, Ajay Bijli, for speaking.
Otherwise, I won't be building cinemas. Okay.
Yeah.
Okay, thanks a lot.
Thank you so much. Great to speak with you, Ajay Bijli, Managing Director of PVR Inox, there on one of those new launches, but they have 125 slated for this year. Neeraj, when did you go to the movies last? It's been a while.
Been a while. Yeah, but a journalist life after a channel is launched for the first 6 months.
So we're not the target group. We're the sad people who don't get to go anywhere.
Yeah, well, it's great to go there and sit and munch on the popcorn and watch a movie. I wonder if Siddharth Khemka and Himen do that. Let's ask them this question as well, Tamanna. Himen, I'll start off with you. A view on PVR and whether you go to the movies currently.
Honestly, Neeraj, I haven't gone to a cinema theater in 10 years or more.
You're essentially even less of a target audience than me and Tamanna are, which is fine, okay. But do you have a view on PVR, Himen?
Yeah. See, we've had a couple of hits and misses. Frankly speaking, I think we've had Cry Wolf, and this time it's finally happening. What I mean to say is we've come off quite a lot, and it's been down for almost 9 months, 8-9 months, Neeraj. I think yesterday's low. Obviously, the whole market has done that. There's been some volume, and these levels have held. A close above 1345, a close above 1350 would mean the first technical green shoot. So I would stick my neck out and say that the worst is almost over, and a weekly closing about 1350 would sort of give me more conviction that, and maybe even a reiteration that yes, it is over. So not much to lose from here. Very strong support at 1280, but a close about 1350, and the 55-day exponential moving average is almost there, Neeraj. So two things would happen at the same time. So that happening, a bounce of at least 100 points is around the corner. It may not mean 2 days, but probably 4 weeks, Neeraj.
I tell you, it's a movie show right now on the bourses, and it's apt time to get in Siddharth Khemka as well, because almost everything is bouncing back, and bouncing back very, very strongly. Siddharth, a big, a redo of sorts related to what happened yesterday. Now, my question is, what have you guys told clients today with this bounce coming in, PM Modi taking the oath on June 8th, so on and so forth? Have you told people to put in fresh money to work? And if so, are the pockets different than what they have been in the last 6 months?
Yeah, good afternoon, Neeraj. Yes, so has been a roller coaster ride last 3 days post the exit polls. Monday we had a sharp rally. Yesterday we saw the carnage, and again today I think there is a good relief rally after the new media reports suggesting that PM Modi would form the government and kind of removing the concerns from a lot of angles, a lot of participants that who will form the government, how it will be. So it reduces the kind of noise. What we have been saying since yesterday is that the government formation will happen, and most likely the NDA government would form a government. So the policy continuity is something that we continue to harp on, while the numbers would be lower for the NDA government, but the policy would continue, and hence more or less the sectors continues to remain the same. Yes, there has been a pocket of you can say the PSU stocks which were overvalued and liquidity chasing them. Now we believe that that could kind of go into a consolidation, the likes of defense, railways. While the long-term fundamentals don't change, the valuations does change, and the view and liquidity would change in the near term, and that could lead to some consolidation in the near term. We asked clients to put in money yesterday also in the fall. We listed down a lot of stocks in the blue chips, in the mid caps, where the fundamentals continue to remain strong. They're not dependent on the government policies. And if you look at some of the sectors, for example, banking, the credit lending, that is something that we have been liking. The other sectors are the consumption space. Monsoon is expected to be good. Rural recovery is something that we are hoping for. We have a lot of management commentaries indicating that rural, after almost 2.5 years, is outpacing growth in the compared to urban, which continues to remain steady. And the election outcome, we believe that there could be an additional impetus from the government in the upcoming budget towards the rural side, towards increasing spending, reducing some or rationalizing some of the taxes that could help the government at least improve the overall sentiments around them. The core theme of capex, I think that would continue to do well, bearing the near term where volatility could continue and some consolidation. But again, the budget would be presented in a month's time, and again, those themes, the pet capex theme, would again be back into action.
All right, Siddharth, an interesting take over there on a day of a massive recovery. Just want to get your take on how much of more upside you see, because a lot of what we're seeing in the market over the last couple of days is linked to all of the political action. And the next 2 days of this trading week also become crucial, because if you're going to be seeing a swearing-in ceremony by Saturday, you will have by Friday a fairly clear picture of the composition of this government, what ministries, possibly allies are getting, etc. Are we looking at maybe ending the week in quite a robust fashion after the Tuesday knock?
Yeah, so Don, I think that is what should be the case over the next few days. The market will be focusing on the government formation, what ministries, which party gets, or who becomes the minister for some of the key portfolios, be it home, defense, railways, and the most prized, the finance, which is very important for the markets. And after that, we also have the RBI policy outcome on the Friday. The commentaries regarding that would also kind of be in focus. So overall, we expect next 2 days the improvement in the overall market sentiments that should lead to some more upside, at least in the near term.
All right. Now, even as we're talking about all of the political action, it's not like specific stocks aren't running related to this. And Neeraj, I'm going to come to you for this very interesting piece that you've got about the Chandrababu Naidu effect, or the TDB factor, as you're calling it.
Yeah, well, not as much of data, but off my hat, from whatever little I remember, Tamanna, I'll put it out, so we may not have graphics for the same, but some of the reasons why some of these stocks might be active, right? So, okay, let's start with cement, and both Ramco Cements and KCP are active. Now, keep in mind that Chandrababu Naidu had this Dream City project, which was shelved under the previous regime. Now that he's back in the fold, the belief is that the Dream City project will again restart, and therefore to build out a city of sorts, right? You need, amongst everything else, resources like cement and steel. Now, why are these two stocks in focus? Because Ramco Cement's facilities, and it's one of the larger players in that region, will actually see some bit of cement output uptick there. The reason why this small stock, KCP, which is a mix of cement, sugar, and some others, is because KCP has a cement plant which is across the river from the site of the Dream City. Imagine having a cement plant within kissing distance of a new city being built. The belief would, in the markets would be, we do not know this, we do not know if this is how it will fructify, but I can tell you this is what the markets are thinking, that the cement from this plant, of a 3 million ton plant, if I'm not wrong, that KCP has, will cross the river and be available for construction out there, and which is why KCP has gained quite significantly in trade today. So both of these stocks, very active today. Beyond that, we've all spoken about Heritage Foods and how Chandrababu Naidu's wife is possibly, if I'm not wrong, still a 24% shareholder here, and which is why this stock, and by the way, we marked this stock yesterday on the trade setup, if viewers would remember. It's up 20% today. This is after an up move in trade yesterday as well. In the last 3 days, Heritage Foods has arguably been one of the best performing stocks. So week to date, I don't think there's a better performing stock than Heritage Foods. And then Amara Raja, again, a company belonging to Jaidev Gala, a former TDP MP, and therefore no current connection. But obviously, if you have been in the same party for years, people would want to put 1 plus 1 is equal to 3 and try and second guess, etc. So a lot of this right now is the market's belief or hypothesis about good times ahead for these companies. There's nothing to suggest that orders are given or stuff that is happening or so on and so forth. But I'm just telling you the reason why this is happening. And Tamanna, at times, it is not about earnings coming in, but just the sentiment changing. And boy, has that sentiment changed for these stocks.
You know, Neeraj, I often say this, that the invisible threads that link companies, performances, the markets, business and politics are so ever present that it's interesting when you see some light shed on them once in a while. But the fact is that nothing happens in isolation, and you know, these could be fundamentally good companies, not saying they're not, but this is the key reason why they're buzzing today. Himen, any of these that you track on the charts?
But while Neeraj was mentioning, I looked at every stock that he mentioned. KCP looks very interesting. It's formed a base. It's given a breakout from a rectangle pattern on the weekly chart. So that looks interesting. I'm saying this weekly chart because the week is not yet over. We have 2 trading sessions left. But if these levels sustain till Friday, it looks like I think there's a breakout coming in. And the dark horse would be Ramco Cement that you mentioned. So Tamanna, we've been down for 1, 2, 3, 4, 5, 6. This is the 7th month in a row. Okay, this month is not counted. We are only just 5 days in it. So 6 months we've been down. And now it's getting oversold, deeply oversold. The second round of positive divergence, a weekly upward key reversal. Simply put, I think Ramco Cement, less to lose, chances of a recovery seem bright, and this could probably be a 2-3 month recovery, Tamanna.
All right, so Ramco Cement is also could see a recovery. Siddharth Khemka, I won't ask you to talk about any of these specific stocks unless you have a view when you track them. But just in terms of the kind of moves we might see over the next few months and the policy push which comes in, where would you look at the rail space? And the reason I'm talking about the rail space is the buzz right now is that one of the ministries that could go to alliance partners is Railway Ministry. Nitish Kumar has run the Railway Ministry in the past. I mean, it could go either way. Do you think that the Railway Ministry possibly being with an alliance partner and not the BJP dents the enthusiasm for the stocks, or there's going to be no real difference?
So, Tamanna, if you see the name that is coming up, he has been a great leader and in his state, a great administrator. So if someone like a charismatic leader like him comes to a railway ministry, I think that will only bring in more focus and efforts, especially from a alliance partner, so that they can show to the country that how much efforts they have put in to improve the railway. So I think that is something which will only go to become positive in the sector. And with the support from BJP, I think the focus on the entire infrastructure capex theme that would continue. Some of the policies that the previous regime has initiated, the NDA 2.0, I think that would continue with the focus on manufacturing some of these wagons in-house in the country, expansion of the railway networks, signaling system security, and that leads to a strong business opportunity for a lot of these players, both in the public as well as in the private space, catering to the railway segment. So I think the demand for railways in a country like India would only go up, and an able administration would only help grow the opportunity size for the sector.
Himen, as we wind down last few minutes of trade, what is your call for tomorrow? Buy today, sell tomorrow, and like Neeraj is saying, would you want to sell today, buy tomorrow? Any of those strategies you have in place?
No. STBT out of the window, I reckon, looking at the market like this. Don't you think?
Yeah, but why don't we? Might want to book some profits if you've played it smart. Let's see what Himena has to say.
I would do a BTST. I agree. STBT, frankly speaking, doesn't quantify at this point in time. Something like a Bharat Forge, look, I would say Magad Sugar, but it's not an FNO stock. So something like a Bharat Forge on a BTST makes sense, but no. STBT, despite a little bit of heaviness in the 15-minute charts, I don't know we should get that minute, but I think BTST on Bharat Forge.
BTST on Bharat Forge 15.11, and what a change 2 quarters can make from February when they gave that negative commentary to what the stock has done now. Quite fabulous, really. Okay, so BTST on Bharat Forge giving there. Siddharth, come on, leave us with one name that the house would have, one or two top names that the house would have recommended their clients to buy today.
So, Neeraj, we recommended 2 stocks today very aggressively. One is State Bank of India, SBI, which got hammered sharply yesterday and which is still not recovered today, even in the market recovery. So, we believe the banking space would do well. The credit growth should be in the range of 14-15% for the year, and SBI has been the leader of the pack with the strong credit growth, asset quality, and we expect the growth to sustain over the next 2 years, ROAs to sustain over the 1%, and valuation still being comfortable. The other is more from the defensive space, you can say the consumer space, which is DMart. We are seeing that DMart is witnessing a good recovery in both revenue as well as some of its large store formats where it was seeing a decline in profitability. That is also started to improve. So revenue per square feet and revenue per store, they are all improving. And along with this, we are expecting that consumption demand will improve going forward. The inflation is under control. That is also leading to some cost moderation. And the stock has kind of consolidated in the last 1.5-2 years. So that also brings in some comfort in terms of valuation. So going forward, we are expecting revenue CAGR of 23%, PAT CAGR of 35%. So that is something, the growth we are looking at in DMart, and also gives a defensive addition to your portfolio in the current volatile environment.
Okay, Siddharth, thanks so much for joining and giving us that perspective. Hemant, very quickly, would you carry home an FMCG stock if it's a trade? Any FMCG name, HUL, Emami, what have you?
Yeah, I wouldn't mind. Yeah.
Which one?
Dabur.
Okay, and Hemant, just a slightly longer answer. The targets for Dabur?
Targets for Dabur is okay. Target for Dabur would be 635.
635 for Dabur. What a comeback for Dabur. I mean, for the entire FMCG pack, all the notes, every house that we're speaking to is talking about the consumption story once again. So that's their time to shine. Thank you so much, Hemant. Thank you so much, Siddharth, for speaking with us today. We're looking like a fantastic close. At the start of the day, one wouldn't have predicted such a change in mood. To some extent, yes, but not this kind of a robust move, Neeraj.
Yeah, this is quite stunning, really. And let's see how this shapes up for tomorrow, because this is a recovery of quite another magnitude, really. And the banks are leading the charge, as the Nifty bank is showing. But it's not that the broader markets are not performing, and very few stocks in the red, which is a beauty. I think this sets up for a very exciting last 2 days of trade, Tamanna, before Prime Minister Modi takes in the swearing-in ceremony on Saturday. So packed next 2-3 days.
I would reckon, if the name of the FM becomes very, very important. And remember, no government has to reveal who is getting what ministry portfolio. The order is usually swearing in. Some ministers can swear in at that time. You can have a second ceremony as well. Everyone doesn't have to swear in at the same time. And then portfolios are distributed. The only sort of worry next week will be if there is a lot of gap between the swearing in and the portfolio distribution. Then you would have worries about whether negotiations have gone wrong. But seeing the way that the BJP functions politically, it's doubtful that they would leave it to chance. They will stitch everything up, is my guess, and then go in for a swearing in. So once an official swearing in is announced, And remember, there's a big meeting of the NDA at 5 p.m. today. So by tonight, you will have a clearer picture. It's still going to be interesting times. A lot can change in 24 hours, as we have seen in this last week in terms of mood and outlook. India Alliance is meeting this evening. NDA Alliance is meeting this evening. Remember, all of that coverage right here on NDTV Profit, so you don't have to go anywhere else. All of that is going to happen. So we have to see where the chips fall by the end of the day. That's also going to be important. If it's all stitched up and sewn nicely and neatly, by tomorrow, I reckon you could see another big jump and another day of gains. You've heard from Chandrababu Naidu today. We've not quite heard from Nitish Kumar. So once that is done, once letters of support are sent by these two leaders, it's then a different trajectory, one would guess.
Yeah, well, let's wait and watch. But with that, and an exciting afternoon, it's a wrap on this show from Tamanna and me and the team that put this show together. Thanks so much for watching. But stay tuned, more live updates coming up on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hi, thanks so much for joining me on this special broadcast of the Mutual Fund Show. Equity markets have seen significant volatility this week. It's been a bit of a roller coaster ride. A sharp run-up on Monday, a crash on Tuesday, and a recovery today. Where does that leave you if you're investing in mutual funds? There's something that gets said quite a bit in Mumbai, and I think it's relevant today. Kaiko tension lene ka? If you had not looked at your portfolio this week, you likely would have slept better, and chances are that you'd be more or less where you were last week. But it's still important to know what the trends are and how you should react. And to that end, I spoke to Swarup Mohanty of Mirai Asset and Trideep Bhattacharya of Edelweiss AMC and began by asking whether their fund houses saw increased redemption pressure this week.
No, actually, it was as per predicted. I mean, we've been seeing this reaction for a long time, and the faith of the Indian investors on long-term equity investments were reaffirmed yesterday. Day before, of course, there were a lot of questions, rightfully so. But yesterday, we saw inflows across funds. I mean, both active, passive factors to our market cap ETFs to our active funds. We saw inflows across. It's a good thing to see, that investors are changing their stand in the market and looking at opportunities to deploy, which was such a refreshing day yesterday. We went back happy, actually.
Okay. Trideep, did you see, what was your experience? Because it's counterintuitive, one would say, in a market that saw the benchmarks fall 6%, the broader markets lose ground as well. Swarup saying his fund house saw inflows.
So actually, I would agree with that. I mean, we also saw inflows across strategies and across so-called segments of equities. And I would sort of put the context as that heading into elections, there was a bit of a volatility in terms of the vote count. Of course, the exit polls caused one-way outcome, but if you go to basically days before that or a month before that, we saw a bit of volatility in and around the market. So I think markets went into it a little light. FIIs were obviously massively short, but on the other side, the positions were reasonably balanced. We saw volatility coming about, but I think there were the shaky hands had a bit of a time to sort of do so before. So hence, yesterday, when the markets crashed quite a bit, we actually did see inflows. The final thing that I would say on this is net. Yesterday's closing Nifty levels is same as what we saw in early May. So barring the exit poll drama and the subsequent reality, we are not far off in terms of market levels.
Equilibrium is sought and found often in these cases, but it's heartening to see two large fund houses tell me that they saw inflows on a day where you saw such frenetic selling, and that to me indicates that the mutual fund investor by and large is learning to be more pragmatic and focused on the long term. From the fund manager's standpoint, and from wearing the hat of a fund manager, Trideep, I'll come to you on this one. How do you navigate this and how are you approaching this? Because yesterday would have presented several opportunities with stocks falling, 20-25% in certain cases. Is that a buying opportunity, or do you wait for the dust to settle just a bit?
So I think the practical answer is a mix of both. What we do is we never buy full in one go, and at the same time we don't want to leave too much for the later. But I think I see objectively this event as an excuse for correction in valuations of those companies where the valuation multiples had really kind of shot up, given they were in trend, so to speak. And if you take that valuation correction away, I would say net between a month ago and now, most likely 99%, we have a same government. We will probably see the key ministries remaining the same, and hence maybe we have a coalition government, and hence maybe to a certain extent there might have to be a little tweaking in the policies. But little tweaking in the policies is very different from policy reversal, which the market seemed to be worried about yesterday. So from a medium-term standpoint, the earnings potential don't really change. It is just that what valuations in some of the in-trend areas, they have taken a haircut of about 20-25%, which in the grand scheme of things is quite healthy, is the way I would think about it.
Okay, so that's the fund manager perspective. Swaroop, you've got your ear to the ground and you speak to a lot of large investors as well. The smart money, one would assume, does what Tradeep is doing with his funds, which is to deploy selectively and to deploy strategically and take these opportunities to average your cost. Is that the right approach?
Yeah, absolutely. I mean, there's no doubt or debate on that one, because at the end of the day, it's this average price that will define, and how much you accumulate at that average price will define the wealth you accumulate. And that's what we tell all investors also. If you are ready to buy day before on some government formation news, you should be buying more today at these levels. Now, there are two types of people in the market. The seller wants the market to go up. The buyer wants the market to go down. You have to decide who you are. If you are a buyer, then if the market goes down, you should be happy. And then many people sort of keep it simple on that philosophy and continue buying this long-term story called India.
Okay. Last couple of questions, gentlemen. Tradeep, some of the froth that people were talking about and have been speaking about all of this year seems to have been skimmed off. Would you say that that would be a fair assessment? And do you anticipate at all that there could be a shift in the kind of flows that come into mutual fund schemes? Is that something that you are preparing for in the broader end of the spectrum at least?
Look, I mean, I think overall the way, I'll give you an answer in a roundabout way. Flows is an outcome of how the companies or the market, or how the market does. Market is a function of how the earnings do. And between flows, market and earnings, the more predictable one is the earnings. And there I would say that the earnings story of India, which was robust, will continue to be robust. The fact of the matter is that the capacity utilization of India Inc., which was hovering around 77-78%, will not change dramatically within a day or two. And hence, the shape of the CapEx cycle may be too pronounced or less pronounced, but in some form or the other, you would see CapEx coming through. The power deficit scenario that we see is very much a function of where supply-demand scenario is in that segment. That is going to kind of, work its way in the earnings of companies which are exposed to the same. That doesn't change between 1 week ago and where we are now. And likewise, the real estate sector, where inventories are at a 10-year low, that doesn't change because the person occupying the seat has a little less number of seats than where things were about a fortnight ago. So if I put these things in terms of companies that are exposed to these areas, clearly the earnings of segments which are linked to these will continue to remain robust, except that between yesterday and today, the valuations are about 20-25% cheaper. So when I spoke to people earlier, I said that it makes sense to be selective then. And now, given that the valuations are cheaper, it makes us more look at those companies where we think earnings momentum is strong. The valuations made us stop.